Oh, can't hear you.
I was muted.
Okay.
What's going on, man? Good morning, everyone. Welcome back to Prop for Match TV. Hope you all had a great weekend after our Halloween special, which I think was a pretty fun stream. How are you doing, John? We got John on today, as always. How's it going?
Yeah, doing good. Busy morning at Prop for Match, but excited to be on the stream.
Nice, dude. Nice. Yeah. I haven't looked at charts too much over the weekend. I took a nice, well-deserved break, I think. But that Halloween special was fun, man. Hunter was, he's definitely a character of a guest. He's got some funny opinions, some strong opinions, but he says it with his chest. So I respect it for sure. And yeah, we had some good trades too, man. I mean, how was your weekend, John? Did you do anything fun?
Yeah, just relaxed. with the family. It's good to have take a break from the charts and work, and take some time for myself, and be with the family. So that's what I did, and I'm
Nice.
happy about it.
Nice, man. Nice.
Yeah.
Yeah. Chat. I see a lot of familiar faces in the chat. How are you guys doing? Dino, good morning. Smart Tech, I am Gold, Dharmesh, good morning, everyone. How we doing? We got a great show planned. We have two friends of mine. So we have Austin Clark and Matt Mickey coming on later today. I'll tell you guys more about them soon, but they'll be on at the Open. Really good futures traders, and they're like really heavily focused on data. So like Austin is like, he's just insane. He's collected so much data, and everything he does, every trade he takes, he knows like the exact probabilities of like how each thing will play out, like, which I am not that type of trader. But we both use similar concepts. Like he uses the midnight open price a lot, which I use. So I always have a good time talking to him. And then he has his partner, Matt Mickey, who I have not spoken with, but I also follow him on X, and he posts a lot of like really quality education. So I think that'll be a fun one. But other than that, I mean, I'm down to get into these charts, John. How was your Friday? Did you trade on Halloween?
I did, yeah. So Friday was great. I kept so I couldn't change my bias quick enough. So on that drop, I kept looking for a bounce. And yeah, that's one thing, every trading day teaches me something new, and Thursday was a really good lesson for me, where I can change my my bias more quickly than trying to repeat the same trade. So was a bit red on Thursday, but was green on Friday. So that was
nice.
Yeah.
Okay, so Thursday you were trying to long, and the shorts were just playing out. But then Friday, did you end up taking like bounce trades for the longs, or did you get short?
Friday, let me try to recall. I think I took bounce trades on Friday.
Yeah, because I feel like Friday you could have went either way. Like I took shorts, and shorts worked out beautifully, but you could have took longs in the afternoon, which is around your time, right?
Yeah, exactly. So I took longs in the afternoon. I had one really good long, and then I gave some back because I was looking for the sell later on in the day as well, because we were hitting some really strong levels above, and because we sold off pretty much on Friday, I thought a sell would be good, but I think buyers kept going at the end of the day.
Yeah. Yesterday was pretty it was clean once we got to the downside, and then after that, man, because it was Friday, it was Halloween, I was like, okay, I took a winning trade on Tradeify on stream, then I went to Apex after stream, took another short, and I said, okay, I'm just 2 for 2, and I'm done. I'm getting off the charts. I didn't look at it after that, which honestly I'm happy with, because I may have tried to keep shorting. Like I checked back on the charts at like 4:30 just to see how we closed, and that pump did surprise me. So
yeah, I had some pretty clear levels that I thought we would reject from at the end of the day, but buyers were really strong near the end. But yeah, I enjoyed the stream on Friday. I watched some of the stream. You had your mask on, and you had a really nice short. I saw you were like, oh, I should have held on to it, but yeah, it was a really good one, and it kept going a little bit more. But
I think the mask was helping me out a little bit. I'm like, maybe I should just keep the mask for future trades. It's fun to like throw that on when you're in a short. You know what I mean?
Definitely. Yeah.
Dharmesh in the chat just says, I'm so shocked how you guys keep getting different guests each and every day. It's hard work, but we're doing it, and we are going to start having some regulars. Like John is an obvious regular. Everyone loves when John comes on, but we have a couple more. Forex Ike is going to be on. This is going to be his second time. If you guys remember, Forex Ike came on for the first opening stream. People really liked him. He's like a good trading buddy of mine. So he's going to be on Wednesday again. So yeah, we're going to start getting some more faces. You're going to get used to more familiar with people. So that's going to be good. But yeah, guys, I mean, I'm down to take a look at these charts. I did mark my levels John, you could also let us know what you're looking at. I can give you guys a quick rundown. Like, all I've done so far is mark my volume profile levels. So we got our previous day's POC on the NQ, value area high, value area low. And obviously I'll have my previous day's high and low on here. So, on the daily chart, I'm still not getting a lot of helpful information here yet. I don't know if you agree with that, John. Like, we're in a tight consolidation on the daily chart now, and we have some clear imbalances below still. Like, could this be the week where we come and take this new week opening gap on the NQ? I mean, I think it's reasonable. We haven't built up much support anywhere in this run up. So, like, could we get a deeper retracement? Maybe like if I pull a fib, maybe from this swing low to this swing high, that lines up nicely with the 50%. Just trying to find confluence there. I think this could be a target, but I also don't want to get too caught up trying to force that to happen, because we did get a pullback, right? So, like, if this is all the market wants to do, to come up and make a new all-time high, I mean, I can't hate on it. Like, we did get a pullback, and I was begging for one. I just wanted to see the NQ pull back a little bit. So to start off the week, I am neutral on the bias, but I am very aware of this area as a potential target. Whichever comes first, maybe we make the all-time high again one more time. Like, maybe we do something like this. Oops, wrong tool. Maybe we come up again, sweep the all-time high one more time, and then come down to fill that new week opening gap, and then go higher. Like, who knows? But I think there's a few different scenarios. Like, maybe we end up selling off from here to tap into here and then go higher. But these are like my two higher time frame key levels. So all-time high and the new week opening gap. So then if I go down to the 4-hour, couple of things I noted here. So obviously this is kind of still my key level. Like, I just don't see this as like strong support down here. We're just bouncing, but not really making new highs. But we do have a little bullish SMT divergence here. So SMT, guys, I'm sure most of you know, is when there's a price action divergence between the ES and the NQ. So we do have that. You can see right here, ES, if I mark out that same swing low, it did sweep out that low. And it also filled its new week opening gap on ES. So I'm aware of that, but still not super convinced that these are like strong lows that can hold. I'm just kind of in a bit of a neutral phase. The only level I have for resistance for me is like this 4-hour inversion. So this was a 4-hour bullish fair value gap. You can see market bounced here, made a new high, came back down, tried to bounce through it, and we finally got a strong 4-hour candle closure beneath it. Now we're coming up and retesting this overall area. And obviously this is just a general resistance zone. Like, there's a lot of consolidation here. So we will see higher time frame to medium time frame what the market wants to do here. But yeah, I don't have like a strong bias on either side. Intraday, I'm just going to be playing the lower time frame volatility. I think I can see a pullback down to here. Honestly, this previous day's point of control can be my line in the sand. I think this will be my line in the sand. So if we stay above the previous day's point of control, guys, like if the market wants to pull back a little bit, tap into here and go higher, I'd be looking for longs to previous day's high. If it does the inverse of that, if we lose this previous day's point of control, I think maybe we could look for shorts for just like the next area of interest, just intraday. So I think that's what I'll be playing. The last level I'd want to look at is the midnight open. So let me pull that up. Okay, so midnight open, we're currently above it. So that's just another level I want to have marked out. So yeah, I mean, yeah, if we lose previous day's point of control and lose midnight, I like shorts. If we hold these levels, I could get into longs. It's really, I'm like 50-50 there. I'll just going to follow what the price action tells me. What do you think, John? Any agreements, disagreements? Like, what are you looking at? We can also pull your chart up, but that's my overall take for today so far.
Yeah, no, that was a really nice analysis. I'm pretty much aligned with everything you just said. For me, it was zooming out to that daily chart. So right now we have two inside bars. We're currently, I don't know if you use inside bars, but basically the previous bar is inside the other.
Yeah.
So whichever way we break, we're going to see some volatility. I just don't know if it's to the upside or to the downside. And I am watching that gap on NQ as well. See if we
Yeah,
go
it's
back
a lot
there.
more relevant now, right? Like because we've
Yeah.
kind of pulled back.
Yep, exactly. So spot on. Yeah, with the analysis, I can share kind of some levels I'm looking at that
Yeah,
could potentially give me some clarity. So um, let me share my screen.
absolutely. Also, guys, today we have our usual sponsors. So we have Top One Futures and Blue Guardian to give some accounts away. But we also, starting tomorrow, I'm going to be giving away some Tradeify accounts as well throughout the week. So stay tuned for that. And I see some people asking about if they've received their accounts or not, like from last week. Give the team a little bit of time. Now it's Monday. You had the weekend. Give them some time to get back to you. Usually takes a couple of business days anyway. So just sit tight. As long as you DM'd them and they saw it, they'll take care of you. Okay, let me get your chart up, John. There we go.
Yep. So this morning I was looking at exactly what you just said, Zach. Like for me to have some clarity on the market right now, I needed to zoom out to the daily. And yeah,
Yeah.
inside bar is just when a bar is inside the previous bar. And currently we have 3 inside bars. Today's range hasn't broken out above or below Friday's session. So yeah, we could even get tighter. We'll see. But I do think we'll maybe break either to the upside or downside today. And then this little gap is what I'm it stands out to me.
Yeah.
So yeah, and then if I look at some levels I have drawn up, so I look at the hourly, and there's kind of a lot going on here, but basically there was this range from Thursday and Friday, a lot of nice price action here. So I grabbed that, and we're rejecting from the POC of it right here. So to me, in order for us to kind of we did fill this gap on ES, so that's interesting.
Mm-hmm. Yeah,
But
that's interesting, right? That ES filled it and NQ didn't. It's something I'm aware of.
yeah, and we didn't fill it completely, but I consider that filled pretty much.
Yeah.
So yeah, it could be just maybe more balanced today. Like what would be interesting for me is if we hold this hourly level. So I'll be looking at that, and it's from this price action back here. So if we can hold this, like I imagine there would be some buyers here.
Yeah.
That to me would be a good place if we get below. And right now I have 2 value areas, so it's not super clear. But if we hold this, which right now we're holding, like maybe we rotate to the other side to then get back here. I'm not sure. So yeah, I definitely need more information from the market to make informed decisions. But if I look to the 15-minute, this is my 15-minute chart. So I start piecing everything together, 15-minute, 5-minute, just to see if I can try to figure out where the market's trying to go. And then on NQ, yeah, NQ, this is the hourly, right here. Okay. Yeah, so this is interesting to me on NQ. Currently, we're rejecting from this little bit of balance. You can see we had some nice rejections from it, but sellers are having a hard time. This is good information actually, because if sellers don't smash it to here, then this is really their opportunity to show that they're around. If we get back into this value area, then I'm really hands off unless I get a good long that I think buyers will rotate to the other side.
I was going to say you would expect a rotation, right? If you gain acceptance into that value area.
Exactly. So like something I would look for here, like let's say, yeah, sellers, this could be a good sell right here. Like if I'm looking at all my charts at the same time, and I have confidence that we're going to reject from here, this could potentially be good to rotate back here. But again, in this market environment, I'm always really careful. I think sellers will show up momentarily right here. But if they don't and we pop back in, I would be looking for a rotation to the other side here.
Yeah. I mean that's fair. It's just simply reclaiming levels, right? So you're right now knocking up against a key level, a key value area. If it holds as resistance, you can look for rotation to the next area of value below. But if you gain acceptance into that area, it's more likely we rotate, right? So you're kind of at you're at a line in the sand kind of level here.
Exactly. And then I look at kind of previous attempts just to see what I think the likelihood is. So here, sellers tried to take it down, they couldn't. Sellers tried quickly again, they couldn't. Sellers tried really hard here, but then buyers took over again. So this is where, like, if you're playing your opponent, you have to understand what they've been doing to see like how successful are they at getting what they want done. So to me, like, I would have wanted sellers to take it here. The fact that they didn't is giving me reservations that they do it, and maybe they do it now, but they're having a hard time getting down here. Buyers keep pushing it back up. So I would look at all my levels across both ES and NQ and then make an assessment. It could be that it's a really good play for sellers still. Like if I look at the 15-minute, see, so right here, this is where, oh no, this is the regular trading hours. Okay, good. I have to make sure that I mark them up correctly. So this is the 15-minute. Yeah, and actually there's a, oh no, this is electronic trading hours. This is a good range, but not a lot of volume, so I wouldn't add that. But it could be that, yeah, we're bumping up against this range right here, which it looks like we are. And it could be that we reject. So it could be a decent sell to get back down here. So I would look at that on the 15-minute. And then on the 5-minute, I would also kind of do some analysis. 5 minutes, I have a lot of lines, so I'd be focusing more on the hourly and 15-minute. But here I can see maybe we want to rotate up here. So I might be a bit more cautious with the sell. And then I would look at ES as well. Like, is ES, so, okay, this is giving me even more reservation on the sell. So ES got back into this value area. I don't know how clear it is on the screen, but it's value area high, value area low. And even here we have a value area high, value area low, which we're now clearing. We're getting above. So maybe we rotate back to the POC here or the value area high here, which is giving me less confidence that sellers can take it here. And again, this is a lot of context is needed because maybe NQ is what leads ES to the downside. So this is where, like, the morning, I'd probably just wait it out and see and get more information, because right now I feel it could go either way. So I would do a little bit more analysis and watch the market a little bit more before any high conviction plays.
Yeah, you said a couple interesting things there. Number one, usually one index is going to lead the other a little bit more. Do you see that? Do you think that like the NQ leads the ES more, or is it kind of they take turns going back and forth?
Yeah, they take turns for sure. Like, yeah, that's pretty nuanced in a way too. Like, if NQ is leading to the downside, but ES isn't following, then when NQ does bounce, you put probabilities in your favor by playing ES, because ES is already strong. So when NQ bounces, ES is going to be stronger again. Yeah.
I love that you said that, because a lot of people, they go the opposite way, right? So they say like, oh, if the ES is looking bullish, but the NQ is not bullish yet, they go, let me buy the NQ because I'll get like a better price or it looks better. But most of the time, the ES is stronger for a reason. And if you are going between, like, choosing, I'm going to buy ES or NQ, you should actually just be looking to trade the stronger asset in that direction. I see that happen to a lot of people. They're like, yeah, but I can get a better price here on NQ, with a tighter stop. And it's like, yeah, but it's weaker,
Yeah, absolutely. And if it's, yeah, it's kind of gauging market sentiment, because yeah, if it's weaker, it could still go lower before a bounce. Whereas, like, let's say NQ is really weak, but ES is strong, and NQ is reaching an area or you feel it should bounce from, you have a better chance of playing ES, because maybe ES gets a little bounce to put you in a better position in your trade. But then if NQ keeps going lower and then it drags ES down, well, maybe you were able to sell half. Maybe you were able to put your stop at risk or break even, like things like that. So, for me, like I'm saying it, I used to trade this way. I used to trade both ES and NQ and watch who's weaker and who's stronger a lot. And I still do. Like if ES is above the open, like if ES is above the open, both NQ and ES are above the open, but near the end of the day, NQ is closer to the open than ES. Well, then I feel confident in shorting NQ because I feel they want to get to the open, even though ES is maybe a little bit stronger, but NQ is so close to the open. I would short NQ. And also,
you have a target.
Yeah, exactly. There's a target. And like if ES is above the open and NQ is below the open, those days are usually pretty good. And the reason why is because the market isn't picking a strong direction, because one indice is a little bit stronger than another. So in those market environments, I'm able to play off the hourly levels pretty well, because traders are like, okay, we're not going to rip up, we're not going to rip down. Let me just play off strong levels and get some trades in off those strong levels. And that usually ends up working pretty well.
They're in sync more.
Exactly.
Also,
exactly. So,
guys, I think this is like the first week. Sorry to cut you off, John. But I think this is the first week we actually have some like consistent red folder news coming back into the mix. So like today we have ISM manufacturing PMI at 10 a.m. Red folder news, USD. I mean, the last few weeks we've had like nothing. I think if we go to Tuesday, I'm just checking Forex Factory. Tuesday, no news. Okay. But Wednesday we have news. We have non-farm employment change at 8:15. Thursday, no news. Okay. So it's still a little bit tight, but at least 3 days out of the week we have news, because then coming in Friday we have unemployment and we have average hourly earnings. So we got some news drivers to hopefully add volatility to the market and give us some catalysts to make it move. So I'm looking forward to that. Looking forward to this week.
Yep, definitely. So I told myself I would trade in the overnight session. This would have been a really nice trade, actually.
Nice.
So this buyers popped in a little bit here, and I bet you this correlates with that 15-minute value area high. So we probably tagged it, got below the hourly value area, held it here, and now sellers should be targeting this down here. And if they don't get there, then that's really good information. But if we go to my 15-minute here, I think I had it on the 15-minute, or it was the 5-minute. Yeah, look at that. So 5-minute, we hit it, we cleared it perfectly. So we hit it. So that's where, like, I was looking at the hourly and I was thinking, okay, this is how I would put it together in my mind. I would say, okay, the 5-minute is getting to the value area high. So I'm going to wait for it to get there. And if the hourly breaks and it comes back out of it, I know the 5-minute held the value area high. So we could rotate back down here, and the hourly is a strong level. So if we don't clear it, then to me, this is a good short, which and
that would be your move on the 5-second, right? So you're analyzing that higher time frame, but then narrowing down and just capturing that little bit of lower time frame volatility, right?
Exactly. So I would right here, I would have put in a stop order. I would have put a stop order here, probably set my stop here, would have sold half maybe here, and then maybe I would sell a little bit more because I know we have a value area low on the 5-minute that we're hitting right now. But then I would leave a few contracts to ride down here because that would be a really nice trade. So yeah, that's how I would break it up. So now I'm risk-free in the trade, not risking anything, and I just have to see if my thesis plays out. But you can see here on the 5-minute, we're stalling at this value area low. So but it looks like we're going to clear it on ES. Yeah, we could also now rotate to here. So yeah, at this point, I'd be in a risk-free trade and just maybe have a couple contracts to see if the thesis plays out.
Nice, dude. Yeah. So it's interesting you use the 5-second for entries. Do you ever mess with like the 15-second, or do you see any noticeable differences entering on like 5-second, 15, 30-second, 45 second, because I've never zoomed that in. Like I'm usually 1 minute has been my max, the lowest time frame I'll go. So like, yeah, I'm just wondering like what you've kind of seen the characteristics of trading and moving to those low time frames.
Yeah, the reason why I use such a low time frame is because like sometimes the market rips so fast after we break a level. Like it's I'll try to maybe explain it a little bit, but like if I know, for example, that sellers, or let's say we do something like this, right? Or like we keep trying, and then all of a sudden we pop back in and we get a tiny little back test. Sometimes the market rips to the POC in like 2 minutes. But in order for me to get that trade, I have to be on a very low time frame so I can set my stop order as fast as I can before that one little 5-second candle pulls back to hit the value area low to then rip up to the next area. So I use it that way, and also because the 5-second, it saves me a lot of times. Like for example, here, like there's been many instances where I put my stop order and it doesn't get hit. So like, for example, if I would have put my stop order here on this trade, but what if we just ripped up? I would be wrong, but I wouldn't have gotten filled. And that happens actually often during the day where I have my stop order and it saves me from getting filled. And I'm like, okay, I'm totally wrong. And I clear my stop order, because what I want to happen when that stop order gets hit, I want to be right quickly. And here I probably would have been sweating a little bit because we didn't crash down right away, but I still would have had some confidence. Like my stop would have been here because I know we'd have to clear this in order for me to be wrong. But I would have got filled here and then probably been a little bit red, but then we did get the flush right away.
Yeah, you would have a tight invalidation, but you have the invalidation, and you could basically you're saying you can really narrow in and like pick the perfect spots with the lower time frames. You could be a little bit more detail oriented.
Yeah, exactly. And one thing that I've been practicing with, because I'm using micros now, is I give myself 2 chances to get filled. So like what I'll do is I'll get filled here and I might sell half if I have the opportunity. But if it hits my area again, I'll go in again with more contracts, and then I'll set my stop above, because that happens often. We just back test quickly again before the quick dump. So yeah, it's been really interesting, because if I do add if I get risk free but then add again and I'm comfortable with my risk, I'm still not risking a lot of points, but I'm adding to my position, showing my conviction that I think it's going to go in this direction. And if it does, then I have more contracts in the trade and I potentially could profit more in the trade.
Yeah, you and Forex Ike enter very similarly, because he also uses stop orders. Like I use limit orders a lot of the time, which is a little bit different concept, but it's still about getting the price that I want to get and not trying to chase it. And I feel like stop orders, in a way, it's the same thing, because you're like, I only want to get into this if I get this confirmation right here, instead of just like hitting the market sell or the market buy, right?
Yeah, exactly. There is one thing I've gotten better with is like there's many times, because you have to be quick with stop orders, especially on the 5-second. Like there's been many times there's been many times I've missed an awesome trade because I wasn't fast enough. The market just ripped so fast, and like because there's a little bit of spread, I think sometimes with the with futures, like I'll put my stop order and it won't get hit because I put it too close to the candle and it just ripped up and I don't get filled. So sometimes I put it just above the candle or just below, so I know I get filled. But yeah, there's been many times where I'm like, damn, like I just missed a good stop order and it just ripped without me. So yeah.
I mean, dude, you're talking to a guy who gets in with the limit orders. It's the story of my life, man. Story of my life is missing trades because I was trying to get filled on a limit, but it helps me more than it hurts. So I stick with it, But yeah,
yeah, for sure.
Also, guys, Benjamin said we are at 9:30 a.m. If you guys don't know, we actually had daylight savings. So it's 8:30 right now. We got like a little under an hour before market open, just so everyone knows. But yeah, I mean, Yeah, man. Other than that, like we don't have any news till 10. When you do trade the open, do you like trading before news, or do you like to wait for the news event to come out, let all of the the volatility shake out, or do you like to get in before, or news trading at all? Like, what's your opinion?
Yeah, so I typically don't trade news, especially because I'm just now considering trading the morning a little bit.
Yeah,
But it's interesting. Like I don't know, news hasn't kicked in, right? It's at 8:30, or it is
we have
8:30
news
actually.
at 10 a.m. today Eastern,
10 a.m. Okay, got
which
it.
personally
So
my least favorite, dude, because then you have the 9:30 open. I get into a lot of really good trades around like 9:45, but when we have 10 a.m. news, I'm always a little more cautious because chances are there's a decent probability that I'll still be in that trade. And then it's like, okay, hopefully it goes into profit enough and maybe I can go put my stops to break even, or am I going to just get wicked out and still be right? So yeah, 10 a.m. news tends to be my least favorite red folder news. And I'm always deciding if I should just like wait till like 10:05, see what shakes out. Or if I have a really good setup, like maybe I have to take it.
mm, yeah. I don't typically trade 10 a.m. news just because I'm usually working.
Yeah.
Um, but yeah, I can see why 10 a.m. isn't the most favored time, because the market will try to sort itself out for 30 minutes. Then you get the news. Then you don't know if the market's going to sort itself out more or go up or go down. Yeah. So
Exactly, dude. Sometimes it works
yeah,
out great in your favor, right? Like if you're right on the analysis, it's like, it's a fun time, but you got to take that risk.
yeah. And the only way I would play news at that time is I would give it one attempt, and it's if we hit a really strong level, like an hourly level or a 4 hour level. Because if the market's volatile after that news and we hit a strong level, I'll put a stop order in just to get a quick bounce or a quick sell at that level. Then I'm risk free. And then if the market rips in either direction, then I have
You're
a couple
chilling.
contracts. Yeah. Yeah.
Yeah, no, that's a good system too. I want to shout out Garrow 2.0. He's a regular in the chat. He says it's my second day in a funded account. I made $160 today. Now I got 10% profit, so I'm waiting for a payout. W's, man, congrats. That's awesome.
Yeah. Amazing. Yeah. I'd love to hear more about other people's experience with challenges and firms.
So
Yeah.
I've been telling
Yeah.
everyone, like, because we give away a lot of accounts on stream. I said, if any of you guys get a payout with a giveaway account, I would love to interview you on PFM
Mm.
TV. So we just got to make sure you got to show proof of that payout. But I'm super down to do that. Do like a little 20-minute interview and just go like ask us like how your process was, because I mean, to be able to get a payout from a totally free account is like an awesome achievement.
Yeah. Absolutely. Yeah. Yeah. Yeah, we have a lot of really cool things cooking with Prop for Match. I'm super excited for where we're going. So I can't give too much away, but yeah, the weekends are fun too because it gives me time to think about Prop for Match and what we're doing. Gets me excited and motivated.
Yeah,
Yeah.
hints. Can you give out any little snippets or anything?
Yeah, basically, like we're always working on tools to help you organize your challenge journey or your prop firm journey. So like all the tools that we create are to simplify your life and to help you have one central place where you can keep all your information about prop firms. And because obviously we're a comparison site, we show the most reputable firms on our site. But what if what if you as a trader could go and compare but also manage a lot of your prop firm data right in prop firm match? So those are ideas that we're playing with right now, and we have a lot of cool things cooking. So
By
yeah.
by data, do you mean like trading data, like a journaling type of situation?
Potentially. I'm not gonna say too much. We're still in the
Okay.
research phase, but like mostly analytics, helping you understand what you ordered. So I'm gonna log into my account right now because this is a really nice level for me. So I'm gonna take
Cool.
my first live trade on stream.
Hey, let's
I'm gonna take
go.
it.
All right, let's
So
bring up the energy, chat. We're going to take a live pre-market trade. I don't think I've taken a pre-market trade yet myself. So I think this is the first pre-market trade, period.
yeah. So hopefully, yeah, like there's a few, I do tend to think a lot about my entries. So I haven't given this the full thought, but it feels like a good entry for me right now. The reason why is because sellers should have definitely taken it lower, and they tried so many times and they couldn't. So now, to me, buyers are interested. So what I'm going to do, and this is, I have to assess the risk a little bit, but I'm going to take an entry here, and then just leave it open for if ES gets down here. So if NQ, it seems like NQ will get here first, but I'll wait for ES to see if it can get down there as well. And then I'll put my stop on NQ.
Okay, so you're going to place a stop order, a stop short, or are you going for buy stop? You going long?
Buy
or short?
stop. Buy stop.
Okay, gotcha.
Yep.
Figured, yeah.
Yep. So let me look at the. Yeah, we're in previous days value and range. And same on NQ, previous days range, but we're at the upper end of value. So, yeah, seems like buyers are around.
Definitely.
So let's see if we get one.
I have a previous day's value area high above us at 26,212 on the NQ. You know, we already broke above the POC. So just for like volume profile theory or rotation up to the value area high, the previous day also makes sense to me.
Yeah, we'll see if we get that pull back there. It could be buyers don't even give me a chance, but yeah, they're looking pretty.
So where's your limit order again? What price?
So I would wait. It would be at 26, like 158, 157. So if we get, so I would put, let's say I was working, right? I would put an alert right here, and same on ES, I'd put an alert right here. So this is a strong hourly level, and on NQ, this is a strong hourly level. So I want to wait for sellers to get back here, so I can enter here, and it would match up closely with ES. So that's why I would reserve a couple lots for 2 entries and then set my stop.
I got you now. So you want to see price tap into your level of interest and then wait for the reaction and place a stop order.
Exactly.
Yeah.
So it could be that buyers just run with it, because one thing I noticed here, like once we popped back in, and you can see how interested buyers were, because a lot of buyers are probably looking at the same thing. Like sellers has so many opportunities to take this gap. And again, there's not a lot of volume in these gaps. So the fact that sellers couldn't do that, as soon as we popped back in after this big run up, buyers were anxious to get in. We're really wanting to get in, where we didn't even touch this value area low. We just front ran it. And now buyers look like they want to just keep going. But if the market gives me the opportunity where we head back here to then rotate, I'm going to take it. But it's looking like buyers are just going to try to get back up here. So we'll see.
You know what, man? From my experience, the market will make it look like it's not going to come back to your area of interest. And then within 15 minutes, it's back at your area of interest. So it's not over until it's over. That's why I like targets, because for me, if I was going to like join you on a long, I would be saying, okay, well, the target is most likely for me the previous day's value area high, like the overall target. So as long as price gets back to my area of interest before we tap the previous day's value area high and complete that rotation, trade idea is valid. And there's a lot more ebb and flow than, like, you know, we always imagine that the market's just going to go straight up to our target. And we think, oh, I'm going to miss it. But most of the time there's an ebb and flow. So yeah, it's not over till it's over. I think you can still get that pullback for sure.
Yeah, absolutely. And like, that's where patience comes in, because I'm not interested in any trade at all unless we get down there. Like someone might say, oh, why don't you just jump in to get to the value area high? I'm like, no, like what if we get back down first before it gets there? I'm in deep red if we like don't get there right away.
And guys, what's more realistic? Like, what happens more? You chase a trade and it goes right to your target, or you chase a trade and it pulls back heavy. Even for those few times that it's not going to pull back and you miss the entry, I think you're safer just waiting and being patient. Most of the time, you're gonna do better like that.
Yep, 100%.
I got some people asking if there's activation fees for Tradeify. So they have two types of accounts, and we're going to be giving away both. So they have the advanced account and the growth account. And the growth account the advanced account has no activation fee. So it depends on the plan.
Yep, and we have a nice column on prop for match that has activation.
You want
fee.
to pull that up, John, and show them how you can identify that?
Yep. So let's go to Tradeify. We'll just go to the firm page. Then we go to challenges, and then we have activation fee. Let's see. Right here. Okay. So let me sort by activation fee. So we can see the challenges that don't have activation fees. So 50K, 100K, 150K. So all these up here, but then these down here have $125 activation fee.
So can you click on that one just so we can figure out if it's the growth or the advanced? So the advanced is the one that has the activation fee.
Yeah, all the advanced plans have. Yep. And then
so I mixed that up, guys, and that's why prop for match is great. You don't have to trust me; you can just go there.
Yeah, 100%. Yeah, you can just click on the column, and you get a lot more details on the challenge. And you can customize your table. Like if activation fee is one of the most important things, you can put it first. Yeah. And then all of a sudden, like I have activation fee first, so I can see that right away. Like, okay, that's the most important data point for me. I want to see it first, and I can customize the table. I can remove data points that are not that important to me. Maybe, I don't know. Let me see something. I don't know. I would want to know max contract size, but let's say I'm not super interested in that. I can remove it. All these seem pretty important, so I would leave that, but I can remove columns and add columns that are important to me.
Yep. Yeah. That's the key, is just what you can specify is more important to you as a trader, because it depends. Everyone has different things that are more important to them when it comes to prop firms. Like no one trades the same. There's no one prop firm challenge that is the best. Like it all depends on the type of trader you are and what you're looking for.
Yep. Exactly. Yep.
And speaking of which, guys, while we wait to see if John will get into this trade, we do have some giveaways to do today. So we got 50 people watching right now. If we can get to 50 likes before John heads off around like 9 o'clock, we'll run a couple giveaways. So smash that like button, all that good stuff. And it does look like market's pulling back a little bit, John. Like it might be coming towards your area of interest, right?
Yeah. It could come back. I have too many windows here. Okay, there we go. Yeah. So yeah, what I'm looking at is this 5 minute here. So right, if this 5 minute clears and we just flush down to here, that will give me some confluence as well, which lines up with the that hourly level. So some nice confluence here for sure. So if we get back there, I'm definitely interested.
And that's why we don't just buy at the highs, right? We wait.
Yep, exactly.
Yeah, I like your trade. So wait, would you buy the NQ or the ES? Can you remind me?
NQ. Yep.
NQ. Okay, cool,
yep.
Cool.
So it looks like these levels would match up pretty well. So I'd have to see when price gets down here what ES is looking like. But I would enter NQ. I would reserve 2 entries in case we go a little bit lower. Then I would add another stop order and then look to sell half. And so what could happen is I get into my first entry. It goes in my direction. in which case I would sell half, but then I would just re-add it if we happen to like retest it again.
And I know you switched to micros. So how many micros are you taking, like on your average position?
Yeah, so in this one, I'm contemplating 3 micros per entry, but usually I'll do like 5. So I'll do 5 micros, and then if it goes in my direction, I'll sell 2, and then I'll reserve like one more for like another target, and then I'll leave one to ride. Or if I don't feel like the market's gonna rip, I might just cut it at a specific target, cut all the contracts at a specific target. So the most contracts I'll ever have in one trade is 10. And in
Yeah.
which case, if I take a loss on that, it's actually half. Oh no, that's one mini. Yeah.
It's 1 mini. Yeah, exactly. But that's what's great about micros. Like if 1 mini is going to be your max position size, you might as well trade micros, because then you can at least chop it up in a way that makes the most sense for you. You know, I think once people get to like trading 3 minis, 5 minis, at that point, I think just stay with the minis instead of trading like 30 or 40 or 50 micros, because those commissions will eat you up once you go above like 10. But yeah, if 1 mini, even 2 is like your max position size, and you want more freedom to be able to like partial out in a very specific way, I think micros are definitely the way to go.
Yeah, for sure. And it gives me a lot of flexibility too. Like some trades I have more confidence in than others, and I can just be like, I'm just gonna put a couple of micros on here. Like it's very low risk. I'm not 100% confident we hold this level, but maybe we do. And if we do, then I'm in. So it gives me that flexibility to decide in the moment how I want to size up for any specific trade. So yeah, I like it quite a bit.
Yeah, that's new, right? Because you were doing minis exclusively until recently.
I was doing 2 minis standard for per trade. And yeah, in volatile markets, I would, have some rough days for sure. Because
That'll make hair on the back of your neck stand up quick. 2 minis on the in this market, man.
Yeah, exactly. So yeah, it looks like we might get to that level.
It's coming.
Yeah. So I'll do 3 contracts on my first entry. Yeah, and the market's not super volatile here in the overnight session. So let's see. It's funny because I don't usually talk about my process out loud. This all happens in my head. So like now I'm like saying it. It's interesting.
Do you think it's helping at all?
Oh, 100%. Yeah.
It is.
Yeah. Something about communicating your thoughts out loud just helps you see things differently.
I think it makes you a better trader, because you have to like really justify what you're doing and why you're doing it. It's a challenge at first, but I do think it makes you a better trader for sure.
Yep.
So are you in? Did you place a buy stop yet?
No, it didn't get to my level.
Okay, you want it at the bottom range.
Yeah, I want it to get here.
Okay.
Yep.
Got you.
Here or close to here. Like if we got here, I'd probably, because I think buyers want to get into the market, which they do. So
they want it.
We'll see. But yeah, maybe we come back down one more time before it rips.
Do you ever look at like the idea, like the concept of a liquidity sweep? Do you ever take that into consideration? Like, oh, if the market sweeps out a key swing low, that adds fuel to my long idea if we recover after that. Is that something you're paying attention to at all?
Yeah, potentially. It might be like the swing lows and the swing highs could be very similar to like me just having a strong level, right? Like for me, this could be like a swing low. Like I'd have to look at the price action, but like maybe I'm waiting. Some traders would call this a swing low, where they're waiting for this to get tagged before we head higher.
Yeah.
So I'm not super familiar with the concepts of swing lows and swing highs. Maybe they're higher lows and higher highs,
Yeah,
but
that's what I mean. Exactly.
yeah, yeah. But yeah, that's in my case. Like there could be fib traders that this level lines up well. There could be price action traders where they're waiting for that. For me, this is a value area low. I know if we get back here, there's going to be buyers interested, unless we have some major event that sellers just cut through it. But like that to me like makes sense. And if I were to look at price action, like let's look at the 15-minute. Like okay, yeah, the price action would line up with this as well. Like we had a big rip up on the 15-minute. Here's a higher low, right?
Yep, exactly.
So, like I use that also, but I would say for my entries and exits, volume profile was a game changer, because I would understand, okay, we're looking for a higher low. The thing I never knew is when is that higher low going to be set, right? So by having volume profile, I have way more context on when a higher low could be set because of these levels, these stronger levels.
And okay, yeah, that's interesting. So why does that give you more confidence? Because you're waiting for the reaction inside a really important area of volume, right? So is that the idea?
Exactly. That's exactly it. So I have price action kind of confluence in my mind. Like I know we just had a rip up on the 15-minute. Buyers will probably be interested in a higher low. Now, where would I look for that higher low? Okay, I have a clear place where I would want to enter.
Yep. And by the way, the chat, Wendy has said you do a great job articulating, John. So you're doing good going over your analysis to people.
Appreciate it. Thank you.
Yep. By the way, guys, I know John's going to hop off in a couple minutes. Still looking to run that giveaway. We're super close to 50 likes. So we hit 50 likes, we'll go ahead and run that giveaway. Just a reminder. But yeah, man. So, okay. So you said like you're getting ready. You have an idea. At this point, the market has made a new high. Is your idea still valid to you at the same area? Is this like, are you at a point where you might actually want to look for a more shallow pullback? Or is it just, I'm just waiting for this area? It's either this or nothing.
Yeah. So this is where I would kind of assess the situation. So what I'm noticing here, my initial theory didn't play out. So this trade is becoming, what do you call it? Like canceled, or like not canceled, but like
invalidated?
Invalidated. Yeah. It's still valid if it goes.
Yeah, because the trade idea worked. It's just it kind of passing you by.
Yeah, exactly. So at this point, I'm starting to feel like, okay, this trade is, I didn't get in. I didn't find any good place to get in, and I'm not mad. Like some traders would be like, oh, it's going in my direction. No, like I'm like, it didn't do what I wanted it to do, so that's fine. Go ahead, market, do whatever you want. I'm waiting for it to do what I want. So yeah, it could be we rip higher. So now like the trade maybe is going on without me. So what I would now do is reassess. Like I would, reassess if there's another trade that is favorable now that the market is kind of going higher. So what I would do is potentially, because I don't use the 5-minute levels as much, I use them as reference. So right here, you can see we rejected here from this value area high on the 5-minute. And to me, if we rotate back down here, this is potentially like a decent long, right? Because like the likelihood of buyers getting all the way back down to the hourly is becoming less likely. It's still possible, but it's less likely. So what I would do, because I don't like playing the 5-minute, I would actually still wait. I would still wait to see if we get back down here. And if we don't, then I would just let the market do its thing for an hour, 2 hours, and come back when I have more clarity, because either we rip up to that value area high here, or we come back down here. And those are the only two places where I'll have more information on the market, because on the 5-minute, we might be able to hold this, but we could also just fill this gap quickly, so I need more information.
You're stuck in the middle of the range right now. So you want to be at some type of extreme, either on the high side or the low side.
Exactly, exactly. And here we're rejecting from the POC. So that's a pretty strong level. Like maybe we do come back down before we rotate. So yeah. But look, no, looks like buyers are going with it.
They're in control. Also, though, it's a
Yeah.
pre-market trade, so it's like, if you miss a pre-market trade, it might be not as intense or like, oh damn,
Oh,
what is
there it
happening?
is. Yeah, there you go. So that's new information. That is a lot of new information.
What is going on?
Right? That is very good information.
Chat, what just happened? Who hit the buy button?
Yeah. Did we have news? Where's the news at?
There's not supposed to be any news. This must be like breaking news or something.
Yeah. So here you see how the market just ripped up. So here, like this would be potentially a buy here. I would enter in here and then probably sell half. Let's see.
And that's just
Yeah.
like a momentum play, right?
That would be a momentum play. Yep, for sure. I actually would want it to come down a little bit more, but this would probably give me enough to sell half. Like, yeah. So like, let's see.
Damn.
Yeah.
Ooh, Shavam was in the long. Shout out Shavam. Let's go.
Fire. So yeah, I would have been wrong here. Maybe I'll put my stop here. But let's see. This is like a momentum play playing off this. Yeah, I would have got stopped. So now for me, yeah, and yeah, I don't know if I would have taken that one. The market's just moving really.
Yeah, it's
Really
going
high.
fast right now, man. Damn.
But I'm definitely interested here if we get back here for a long.
I like that. I like that better than the first one that you just marked out.
Yeah, it was a little bit too soon.
By the way,
But yeah,
I'm going to start using sound effects, John. So hey, for anyone who's in the long, my applause goes out to you. All right, sorry, continue.
Yeah, so I might, let me see if I'm going to dabble real quick. I'll put two micros. Just yep.
Can you mention what platform or prop you're trading? You don't have to if you're not comfortable, but
Yep, Top Step X.
there we go. Top Step X, guys.
Okay, so I'm in. I'm gonna wait. I have 2 contracts. Okay, sold 1. Now I'm risk free. And yeah, we'll see if we get to higher levels. But I might just take, if we get to 10 points, I might just take it and call it a good stream trade.
Absolutely.
Yeah.
So what was your entry? What price?
I got filled at oh wow. Okay, so this is where I'm gonna stair step it.
Here you go.
So let's see. Yeah, I'll just stair step it here, see if we go higher. If not, I'll take the 10 points. Yeah, so I entered at 209. Definitely could have held it, but whatever. I'll take the live stream win.
Yeah.
I entered at 209, so I got like 15 points on that trade. 14, 15
You still
points.
in? You still have a partial in? You just got trailed out?
Yeah. Yep. I just like stair stepped it on the 5 second just to lock in that gain after that big this candle here.
Nice, dude. All right, guys. First trade of the week is a dub. Let's go.
Nice.
I love it.
So yeah. So I guess my mentality, I'm still so used to minis. Like this would have been a banging mini trade, and it's a good micro trade, but like I could have let that one contract ride because I think buyers are still strong.
Yeah.
But yeah, it was a nice first stream trade. That
was your first trade on a live stream ever, right?
Yeah. Actually,
So yeah, just lock it in, man. Love it.
Yeah. Nice,
dude. All right. I mean, okay, it's 9:04. Do you have to go?
I do actually. Yeah.
The man stayed for the trade. He is a trader, guys. That is a real trader.
Yeah, for sure.
All right, man.
Very nice.
Great way to start off this week, bro. We're starting it on a strong note.
Yep, absolutely. And one thing, like, so this is a strong level on ES. Like, I could have had conviction that we held it till there. That could have been a good one. But yeah, just I like analyzing after the trade too, like what I could have done
Totally.
better. Where journaling comes in, like journaling is important because you could be like, oh, I could have done this, and maybe you do it next time and kind of refine your approach. So yeah.
Absolutely key.
Yep, for sure. Yeah, I do have to go. I think I have a meeting actually. So
All right, go. Do your thing,
all
man. We
right,
will see
awesome.
you again tomorrow, right?
Yes, I'll be here tomorrow. Yep.
All right, John will be back tomorrow, guys.
Awesome.
Thanks again,
Thanks,
bro. Have
everyone.
a good one. Great trading. Talk to you soon.
Yep. Yep.
Peace, bro.
Thanks, Zach. See you. Bye.
Later. Damn. All right. Strong W to start the week. Let's go. Hold on. Let me fix this. There we go. What's up, chat? W's for John, man. First live trade ever for him. It's always a little bit nerve-wracking. You know what I mean? It's always a good time. First live trade. I'm pretty sure the first trade I ever took on a live stream was also a dub. So I think, you're so cautious of it that you're like, I'm only going to take a really good trade for that first one. So yeah, the man got it. Love it. On his Top Step accounts too. Shout out Top Step. But all right, guys, listen. We have Austin Clark and Matt Mickey coming on in about 25 minutes. I did promise a giveaway if we hit 50 likes by the time John got off, which we did. So let's do this. Let's take a quick little break, but let's get our entries for the giveaway in first. All right. So no reason to leave the stream. Just sit with us tight for a few minutes. Let's get our entries in. Let's type John in the chat. Type John in the chat to enter the giveaway. And then like 2 to 4 minutes, we'll be right back and we will announce the winner. We will give away some Top One Futures accounts to start it off. So, all right, get your entries in below and just stay tuned. We will be right back. All right, chat? All right, sit tight. Be right back. All right. What is good? What is good? What's up, chat? Let's get this going. Hold up. Hold up. We got 95 people watching. Beautiful, man. Beautiful. Here we go. So, okay, listen, guys. Listen, before we run the giveaway, I want everyone to get their entry in one more time while I'm here. I know you guys have probably been spamming the chat this whole time, but just type in John one more time just so that I don't miss your entry, okay? So everyone, just go ahead, just spam the chat one more time. You don't need to go more than once now that I'm here, but just so I don't miss you. You know, if you enter once, enter twice, it's okay. You're not going to get 2 entries though. Like we're going to be able to split it up just so everyone understands that. But yeah, we'll give you about like 20 more seconds to enter. We'll run this giveaway, and then soon enough, Austin and Matt Mickey are going to be coming on, which is going to be a fun one, man. I'm excited. I ran a stream with Austin Clark once. It was probably over a year ago. So I haven't chatted with him on stream since. We go back and forth on X though. He's a great trader, man. Really good energy, good vibes. And we trade somewhat similarly, but also very different. So it's going to be a fun conversation. I know he's real big on data and analytics. Like everything he does is kind of based off of hard data. So it'll be super interesting to watch that. But all right, guys, that's going to be it for the entries. All of you, I think, got a chance to enter. Let's get this music back on too now. Hold up. Also, I see we got 100 people, 112 people in the chat. Let me know, chat, who is in here to watch Austin and Matt speak? Anybody from their community in here coming into chat? Just wondering. Pack Trade Group Raid. Stick. That's the Pack Trade Group right there. I love it, man. All right, guys, let's just do a quick pinwheel. You know, we don't want to waste too much time on giveaways. We want to get to charts. You know what I'm saying? Charts are where it's at. But we do want to give back. So we run these giveaways every single day. For anyone that's new, we run multiple giveaways throughout the stream. But the real value, in my opinion, is that we go ahead and analyze charts live and take live trades. But hold up one sec. Hold on, I'm going to redo this. Pack for the win. I love it, man. I love it. Yeah, they're going to be on in like 5 minutes, 5 to 10 minutes, guys. I just want to get this giveaway out of the way. You know what I mean? Also, who tuned in last week for the Halloween special, man? That was a fire stream. Caught 2 winning trades on stream. And then I caught another trade later. It was all shorts too. All right, here we go. We got this list. Sorry for the holdup, guys. All right, now, guys, remember, I just want to say, we've had some issues with people trying to like scam accounts. So once we announce the winner, I need whoever won, I need you to tell me your exact YouTube handle in the chat. Okay. If you don't do that, you're not going to be able to claim. So we need to do that so we make sure we got the right person when it comes time to claim the giveaway. But all right, let's give away 2 top 1 futures accounts real quick. So let's do this real quick. Here we go. All right, we'll do 2. We'll give away 2 top 1 futures elite accounts. See who it's gonna be. Oh, it was almost Wendy in there, but okay, we got Mufasa as a winner. W's in the chat for Mufasa, but okay, bro, this is what I need from you, okay? You need to give me your exact YouTube handle, Mufasa, okay? Because we have people trying to scam us in the, and claim accounts when they didn't deserve the account. So Mufasa, tell me what your YouTube handle is in the chat, please, right now. Mufasa 36. Okay, thank you for that, my friends. So you'll be able to claim your account. Just go to Prop Firm Match Support on X, and you will be good to go. I'll show you guys real quick. So you're going to go to X, go to Prop Firm Match Support on X, and just DM them with a timestamp, screenshot, and show them your YouTube name, okay? So that's all you got to do. I'll put it in the chat. One sec. And we'll run one more for you, okay? But yeah, guys, just DM PFM support. Let's run one more, and then I want to get Austin and Matt Mickey on. I'm just going to make sure that they can get in here. Let me send them the link now, just so that I know they wanted to get in a little early so they can make sure everything's good to go. I got my espresso. It's going to be a good stream, guys. All right, let's run one more giveaway real quick. Let's get it done. Who's it going to be? Usha. Usha, congrats. All right, Usha, you are the winner of a Top 1 Futures account. So please, real quick in the chat, drop your YouTube handle, okay? Just so that we definitely got the right person. Please do that real quick. But congratulations, and then we're going to get Austin and Matt Mickey of the Rat Pack on. Okay, Usha, I see you, but drop your YouTube handle, please. Real quick, please. Thank you, thank you, thank you. There we go. I only need it once. All right, you're the best. All right, cool, guys. Just get that going. And again, just DM PFM support, all right? That's all you got to do. DM PFM support on X, and you can claim your account. So congrats, guys, to all the winners. So let's see. We got, what, 5 minutes until the open. NQ is ripping. I mean, we're just ripping higher. I'm super interested what Austin and Matt Mickey are looking at. I know that they use the midnight open a lot. We're well above the midnight open, right? So are they going to be looking for shorts down to midnight, or do they have some other type of data that says like they should be going long? You know, that's going to be what I'm learning from them. And I'm sure some of you guys in the chat, you probably know exactly what Austin and Matt Mickey want to do, because it seems like they have a pretty well-defined system, right? But yeah, we'll just wait for them to hop in, and then we'll add them up. Yeah, guys, if you keep typing John, we're just gonna have to kick you. Giveaway's done. We'll do another giveaway in a little bit. Wendy, maybe we'll have to hire you as an admin, as our stream mod. You seem pretty dedicated. Maybe we'll look into that. What's my view on gold? We can take a look at gold. You know, we'll see. We'll see. Maybe Austin and Matt Mickey are into it too. You know what, guys? We'll just run one more quick break while we wait for Austin and Matt Mickey to get on into this stream. So we'll be back in like 2 to 3 minutes. Just stay tuned. All right. All right, chat. We are back, and I think we got the squad up in here. All right, let me pull them up. Matt, Mickey, and Austin, what's going on? How
Hey,
we doing,
man,
guys?
good. The U.S. Express. You ever watch WWF?
No. The U.S. Express. What's that? What's that?
Yeah. So they were brothers back in the wrestling days that just like rocked America, and just like they were a tag team, right? And that's what me and Austin are.
I love that, man. Hey, I'm in the U.S. too, so we are a U.S. team right here. Let's go. How you guys doing though this morning?
Like a Step Brothers interview.
It's good. It's good to have you guys, man, for real. I know, Austin, me and you have done one stream on Twitter maybe a year ago, but other than that, we haven't really like
Completely random. Yeah.
It was so random, bro. I was like, I'm going on stream. If anyone wants to hop on, let me know. And you were just like, I'll hop on, bro. I was like, sick.
Yeah, I was like, let me come crash the stream, and I completely was not expecting him. And he was like, "Yeah, dude, here's the link," and I was like, "All right, say less."
That's true. You were like, "Let me crash this." Yeah, you said, "Let me crash the stream," which was like sarcastic, and I was like, "Here you go, come through." But yeah, guys, it's good to have you, man.
You for having us, man.
Yeah, absolutely. So you guys are like a team. You run. Is your group called the Rat Pack, or is that just what you call your like squad?
No, Pack Trade Group.
Pack Trade Group. Okay, love it. Yeah, we got a lot of you guys in the chat, so they came over to watch. So, I mean, listen, I would like to just do live trades, keep it super casual, but I would also love to hear a little bit about kind of how you guys both got started working together. And I know you guys have some years under your belt from trading. I mean, I think a lot. So maybe if you could just give, the rest of the stream a little background on who you guys are and what you're all about.
Yeah, you want to go first, Mickey? You're in the middle here.
All right, I'll go first. So I'm Matthew Mickey, and like my journey started about 13 years ago, and so I was Army for 20 years. I joined the day after 9/11, and like after every deployment, I would know that my infantry dudes, my infantrymen, right, because there weren't females in the infantry at that point, would collect on these deployments to Iraq and Afghanistan. They would collect 15 to 20,000 in savings, because all you have money to spend on is tobacco and energy drinks, right? So they'd come back with these hefty savings accounts, and I'm like, hey, don't blow your money on strippers and booze and cars you can't afford 6 from now. Invest it, pay off debt or save it. And then we'd redeploy back home, and then 3 months later, I'd notice cars nicer than mine showing up, and my soldiers wearing the newest Jordans. And I was like, I'd bring it in. I was like, I told you guys to stop being idiots and don't be idiots with your money. How many of you guys invested, saved it, or paid off debt? And one of my soldiers would raise his hand, and he'd tell me hey, I invested it in this, and it would be the CNBC special of the day. And then I would watch his account just get blown out of the water, just lose all of it, right? And so that led to me going down almost every rabbit hole ever. I've got my master's in statistics. I've got I learned economic regimens, company fundamentals, options, been trained by some of the best people, to the point where when I retired, I actually sat on a collateral and margin desk, helped with the T+1 life cycle of a trade, traded treasuries and bonds professionally, right? More like swapping. But then I realized that dude, there's nothing I'm doing in this profession that's going to set me aside from achieving my end goal, which is trading my own capital and being retired, right? And along the way, I just was dude, I've got a master's in statistics. I understand the complexity and what goes behind the curtains, which is nothing serious, right? It's just very complex. But I realized I just have to master one kick 1,000 times. I don't need to be the theory librarian. And then I ran into Austin, and I was like, hey, dude, you trade stats, I trade statistics. And why don't we build, you're a vet, I'm a vet. And then we just kind of merge forces and build a community that's we wanted to honor reputational trust and integrity and transparency. So that's kind of how we started. We've been working together for about 3 years now. Austin, I'll pass it off to you now.
Yeah, my name's Austin. I joined the military straight out of high school. I came from a small town of maybe 1,000 people, super low income, and joined the Army, became a lab tech in the Army. That's where I kind of developed a really big passion for objectivity, science, all the nerd stuff. And when I first got exposed to trading, I was kind of, spinning my wheels, just the typical stuff, all the different indicators, all the different stuff. And I was like, dude, the one question I keep getting, I'm like asking myself, and I'm watching people trade, or I'm watching people try to teach a strategy. I'd be like, when they say high probability, or when they say this looks good, or this, I would always ask myself, but how do you know? What's the number, right? Like, what are you deriving a number from when somebody's saying, oh, this looks like a good high probable XYZ? What's that XYZ? Because in lab, right? If you guys don't know, lab techs are the people that give your doctors the diagnosis. How is the people producing the report looking at your lab results? Either it was analyzing blood, urine, any disgusting thing that comes out of your body. I analyzed it and I diagnosed patients. And how do we diagnose patients? We diagnose patients through objective reference ranges. How do those reference ranges get created? Through statistics of healthy human beings. So I was like, why don't I just apply what I already have been conditioned to do, but apply it to the charts? Why don't I create objectivity on the charts? Because that's what clicks with my brain. And so then that's what came about what I do now using statistics. And obviously Mickey told you guys how we ran into each other. He's like, hey dude, I like statistics. Let's get married. And so we're married. That's what this ring is for.
You're work married. I love it, man. Nah, guys, that's like, that is an awesome story. I love that you guys are both vets and you like bond over that, and you bond over having similarities in trading. It's just a really, really cool story that you guys work together like that. Now, let me ask you, before the market opens, are you guys like, do you guys always take trades at the open, or like, do you wait 5 to 10 minutes? What's your usual system looking like?
It's around market open. We look at a lot of statistics of, are we looking at overextended above or below statistics? Where's the current high and low of day? Right now we have a high of day at 9 o'clock with the market open potentially making a new high of day. So what we do is we look at market open and we say, what is the highest probable trade? Are we in a potential trending day for the intraday for the daily candle? And then do I long off market open? And if I do, by how much? But then to the flip side of that, if we are going to do what we statistically do most of the time, which is mean revert intraday, if we break below market open, what's my expectation per target? So yeah, I'd say most of the time we trade around market open, but we need to get that clear, signature to see, do we close above or below? And is there enough room on the table for my TP and defining my risk? Or do we just sit out and let it become obvious?
Okay, perfect. Yeah, I'm familiar a little bit with your guys' system. I know you use the midnight open, which is a big level that I use, but you use a ton of different ranges of levels, all based on time, right?
Yeah. So like right now, you can see that the market's about to open. We're opening up right now. We have midnight open below. We have a lot of statistics below. So right now it's the process of elimination. If we make an in statistic high of day at market open, breaking below, I will take that short for an extent, and I'll tell you guys exactly when I go short if I need to. But when we break below market open, if the live price is accepting below, well then by how much? And by how much is where those statistics come into play. Mickey, I'll hand it to you.
Also, guys, if you want to get your screens up, you're more than welcome. You scroll down below to StreamYard, just hit present, and you can share a screen. Yeah, we'd love to just see what you guys are looking at.
Yeah, definitely. So,
but okay, real. Here, let me pull your screen up, Mickey. There you go. Oh wait, no, that's Austin. Hold on.
Yeah.
Here we go. There you go, boss.
All right, cool. So basically, like, we can use Tokyo, Frankfurt, London, the sessions that put probabilities on New York 1. And so with the highest probability of that would be that we come up, take out previous day high, and then suck back into the range. We have a current low of the day that's supported, right? So we know that P12 mid has a high 90 probability of getting touched, and then the midpoint of London, right? We don't have to make a new low of the day. But first and foremost, right, live price is currently telling us that that signature, this reversal that we're looking for, typically happens between 9:30 and 10:15, right? So we have 4-step reversals that we look at, right? First one being, can we get below the 9:30? And right now we're targeting longs, right? So this is live price telling us, hey, they don't care about these 90% probabilities. right? Your job is to engage with longs. So where can we take longs? I do 10 basis points off of entry for 930 to 10, 930 to 944. Like I'm usually out of any 930 trade between 944 because I want to spend 9:45 to 10 o'clock kind of getting the feel for, did we just put an instant high day, low day in, right? So I am expecting the higher probability movement is for us to reverse. When? Between now and 10:15. However, we have to do 4 steps. And the first step is, can we get below 930 low and start closing below it? No, we cannot. So we continue going higher. This is live price telling you that it's going for the lower probabilities of everything, right? Can we get back below 9 o'clock's 50%? Can 10 o'clock? Because you're fighting momentum. You don't want to be a top ticker, right? Like I don't, at least, right?
Yes.
Like, so I want that proper displacement, right? For me to fight the trend and be a counter trend trader. If I get this correct, I have the rest of the day that I'm going to leash off this information. So like, can we get back below 9 o'clock's 50%, right? So we can see right here, let's draw out where, and this range will change, right? So we can see also this orange line is 9 o'clock's 50%, right? So if we can't do those 2 actions between now and 9:30, I have no business taking shorts. And then 10 o'clock, can it take out 9 o'clock's low and put a Q1 instat high? Most hours outside of 9:30, 9 o'clock because of the open, 8 o'clock because of news, but every other hour likes to put the instat high or low within the first 15 minutes, right? So if we can do that, like we used previous hour 50%, we use the first 5 minutes, we use the opening of the hour to determine that, right? Then we have all 4 steps to say, like, hey, dude, like we just put a higher day in. Now you have the rest of the day to like know to sell the rips. Because at the end of the day, it's a simple problem you're trying to solve.
Hey, Mickey.
It's,
so we just made a really good push and suck back into market open. If we break below market open, which for those of you, it's level 26,235.50. If we get a close below that on the 1 minute time frame, I'm short.
Yep. So for me, like, it's a pretty simple problem that I have to solve, right? Is the higher day or low day in? And is it high probability to be a red daily candle or green? And then to line up, am I selling the rips or am I buying the dips? Like, I'm not one of these traders that likes to do both. Only at 9:30 and 9:44 will I do both, right?
20 seconds left on this 1 minute candle.
All right, I'm going to pass it off to Austin because he's going to walk
here, I'll move. Yeah, let me go over to your charts. Here we go. This is awesome, guys. We're getting a real class right now.
left.
Live trading. This is what we love about live trading, guys.
Left.
And then position sizing is huge for us, right? Like we do risk per trade. So like position sizing is our number one.
I'm short.
Yep, I'm short too. I'm short 3 micros. I'm going to see, can we get below 10 basis points or 24 handles off of this 930, right? And then if we can do that, like how can we continue heading lower? Like I have 730 to 830 low that I'm currently targeting. And can we get back below previous 12-hour high, right? So can we suck back into overnight range?
Yeah, I have so many questions.
182.75.
182.75. I don't want to distract either, but so on average, are you looking for 25 points, or is this also, are you incorporating data there? Like depending on the time of day and the setup you take, are you targeting more or less?
Yeah, so
absolutely.
You see my chart right now?
Yes.
Okay, so I'm dynamic with the market. Okay, so at no point am I ever static because the market isn't, right? So you guys see right here, the market is accepting below the RTH. So that's live price. Live price is being accepted. Now I could be wrong. Here's where people go wrong in trading. I can be wrong. I'm not trading to be right. I'm trading to manage my downside. So that way I let the statistics, which is, if you see my screen, all these levels here, 80%, 73%, 80%, 80%, 100%. This low, I'm not going to get super in detail and nerdy with what we do. All these levels, they do the consistency for me. I just have to execute with proper risk. So if market open is accepting below and these statistics are my checkpoints, I want a piece of the pie. So this day, the reason I'm targeting 0.2%, okay, and I never go off points, by the way. I'll always go on percentages. So if you guys see my price range tool,
interesting.
The reason I have these turned off. So you guys might see it like this if you add it to your chart. I have points and ticks turned off. Percentages always stay the same. Points and ticks change. So 0.2%, I know that when we get a close below market open, a generic 0.1, and we've already hit 0.1, to 0.3% is a very high probable price movement off market open before reversing to doing anything. So now this is my Goldilocks zone. So now in my Goldilocks zone, I just need to find, okay, well, you know how when people say, no, dude, I always only take a 2R trade. I only trade with 15-point TPs. But the market doesn't move like that. The market doesn't say every single day we're only going to do 10 points here. No. So if I know that statistically this is a generic high probable price movement, I want to adapt this generic high probable price movement to the checkpoints of the day. And the checkpoints of the day are all of these levels to the downside. And so I just want a piece of this as a cash flow trader. And so as a cash flow trader with 5 to 6 micros, you guys do the math. This is a $633 trade, right? And I only need one of them and I'm done.
So his rules are a little bit different from mine. Like I shoot for that 10 basis points or 50% of the last 9:30 to 10 o'clock range. We just hit that. So I TP'd. But now I'm going to be patient. I'm going to wait for those 4 steps I was talking about to play out, right? Because if I can get this right, I've got the rest of the day to know your job is to sell the rips, right? But right now you're seeing live price exactly what we did. There you go.
We're back. Here, let me get your.
I just want to demonstrate. Here's the second part. Okay, I'm done. Here's my trade.
Full out.
I'm out. Full out. Here's where a lot of people mess up in trading, Zach. Are you ready for this?
Tell me.
Are you sitting down? I hope you're sitting down.
We're sitting. Should I be standing up?
You should be stand up and then sit down again. No, I'm joking. So this is my trade. Okay. You're done.
You're done, right?
You're done. You've collected positive expectancy from this market. You guys know the biggest reason why a lot of you all fail? You may have a really good strategy. You may have a really good target. You don't know when to freaking stop.
Keep trading.
Because you're addicted.
Yeah, and you're not even considering especially in prop trading, what I've learned, because I usually trade live when I'm moving over to prop now. But you have a 14-day risk of ruin every time you start a new account, meaning you're more likely to blow up using one strategy within the first 14 days, right? So you should be just taking your high expected cash flow EV move for each day, right? And then as you build buffer, right? Then you can start adding on different models, right? But you got to get out of that 14-day risk of ruin phase, right? With one strategy. Too many people try to put on multiple strategies in the beginning of their accounts. And it's like, dude, like now you have the risk of ruin of one strategy times however many different models you trade for that day.
And where do you get the 14-day risk of ruin? Is it simply that you're dealing with a tight drawdown restriction in the beginning of a prop firm account, trailing drawdown in most cases? So until you get that buffer and you build up a little bit of an account balance, you're in the toughest spot possible, right?
So let's take a 150K account that has 4,500, right? You have 4,500 worth of drawdown, right? If you risk 5% per trade, that's 225, right? And if like my 930 has a consecutive loss period over time, like I've back tested this thing manually, 20 years, right? It took about 2.5 years to collect all the data of the 930, and Austin's done it for his, right? It took 20 years, and I could see, oh, this thing wins and loses. It has a consecutive loss of 5, right? Doesn't mean every time I lose, I'm going to go into a consecutive loss period of 5, but I have to account. If I can lose 5 times, 5 930 days in a row, what can I risk, right? And like this, we know that if I have a $4,500 150K prop account, right? $4,500 worth of drawdown, right? And I risk 5% per trade. Each one of my losses has to be 225, and I can lose 5 days in a row and just lose $1,000 without breaching like over 25% of that whole account, right? For me, I'm a little bit more like, I never started in the prop industry. I started in the real world, right? I wish there were props back when I started, but because I spent over 10 years like trying to keep an live account alive, it taught me real quick in a hurry, like, dude, you don't have time to mess around. You need to put a fixed stop, meaning I can control my risk, And how can you sustain the worst case scenario? And I'll let Austin talk his part because he does very similar approaches as I do.
Yeah, please do.
Yeah, man. And if you got guys, if y'all have questions or whatever, let us know in the chat. This is Zach's.
Yeah, please. Any
show
questions?
here.
I mean,
I don't want to take over anything.
no, you guys are doing great. This is super interesting. So I do have some questions about futures props and also about R multiple. What is your guys' take on R multiple, especially being like people that come from a, purely statistical background? Do you care at all, or is it mean nothing to you, or somewhere in between?
Nothing.
I'll answer that one because I love this conversation, right?
Yeah.
So this is where deep studying strategies go into play, right? So like for the daily profile, like the daily profile isn't designed to trade off. For the 4 steps I do to lock in a high day, a low day, and if there's going to be a red or green daily candle, mean nothing, right? When it comes to trading, I've back tested so many strategies and so many hour time frames, and we've done a deep dive, right? Everybody in the pack has done a deep dive for each hour of the RTH, and what they found is that R multiple is it constitutes, right, the time in trade, right? Meaning if you're going to be in a trade for less than 45 minutes, right, and you're using the hourly chart, the current hour and the previous hour to make decisions off of, then through the last 120 days or 6-month look back, or you do like a very deep dive, 5-year, 10-year, 20-year look back of the strategy, no matter what hour of the RTH, right, you'll see that your time in trade is what should determine, right, your R multiple. Now, if you want to be purely mechanic, there's not an hour in the RTH that supports anything less than an hour of being in the trade that can sustain 20 years worth of trading, or 5 years worth of trading, or even 3 years worth of trading without using that negative R, right?
Wait, can you repeat that one more time? Actually, I'm pretty sure I got that, but just so everyone, repeat that one more time.
Time of trade, time and price is what determines that positive R, negative R relationship, right? So like we've taken every single hour of the day and we've wrapped multiple strategies around it, and each one of them told us the same thing. First and foremost, 90% of intraday strategies have, just by themselves, just purely mechanically, you take them every time the if-then statements appear, have between a 15% and a 60% win rate, right? That's not that great, right? So you have to have some other context to know when to turn that strategy on or off, right? Are you in a ranging market and you trade in ranging models, right? Are you in a trending market? Are you trading trending markets, right? Are you in a reversal? Are you trading a reversal style model, right? Are you in a reversion, right? So first and foremost, if you can't do that, then you're gonna have to accept 15 to 60% win rate. Now, if we break it down further to what really matters, because the win rate does not matter, right? Just knowing how to turn them on and off, right? And if you start looking at profit factor and expected value, right, you'll see that most intraday systems, right, that last less than an hour, that sustain 1 to 5 years or 20 years worth of taking that mechanical trade system, you have to have a negative R structure to support it, or you will be net negative at the end of the year, the 3 years, the 5 years, right? Now, if you can find systems that hold through time more than 1 hour, like the 3 hours or the 12 hours or longer intraday, that's where that positive R flips, right? So not only do you have to match models with market condition, like trend versus range, right? Like, so if we're range, we call it range 1, like 38% of the last 20 years intraday, we've ranged more than we've trended intraday, right? So we know, like, we need to match, we need to find the measured move like midnight snap, and we need to match the proper risk profile with it for the time of trade, right? So if we expect to be in, and we're trying to capture the measured move of the midnight retracement, we know that, like, we're going to have to take a negative R approach because we're only in that trade for usually an hour or less. If you're in a trending market, like right now, we're definitely displaying trend, right? So we know we're going to have to be in this trade for a little bit longer. And so we're going to have to turn on trend-like models that's going to keep us in the trade for 3 hours or more, right? Which will allow price to go to our extended targets, right? So we turn on trend models, and that's where the positive R flips, or the negative R flips to a positive R. That's a lot of talking, right?
No, but it's great, and I have follow-up questions. So everything is based off statistics, but I heard you say a purely mechanical trading model that doesn't take into account the current market conditions is going to be a lot lower. It's just not going to work the same. So you are able to determine, okay, we're in a trending market right now. I'm going to use X model or Y model, or we're in arranging conditions. I'm going to use this model. First off, are you still purely mechanical with how you enter and exit once you determine the conditions you're in? And also, how do you determine those types of conditions? Because as intraday traders, we could be in a daily uptrends, but be pulling back on the 15-minute, right? So how do you determine those things?
So we've broken it down like this, right? If you look at all the possible wiggles that the NASDAQ does, it can do over 25,000 possible wiggles between 930 and 1600 on the 5-minute chart, right? No human can memorize that many patterns, right? So what we do is we base our decisions off the hourly, and we use the 930, right? And there's different characteristics. There's 4 possible characteristics, right, that we can do without going into too much of a class, right? But if we use the 930 as the mean, right, just because it's a fixed constant, we use everything off of a fixed constant, right? Right, so this represents the mean of the rest of the day, right? The 930 1-minute candle high to low, right? Now we just look at the hourlies. There's 4 possible things that it can do. We can sit here for 4 more hours and touch and swipe through the mean, and that would put us in ranging conditions. Well, by 9:45, we should have already displayed that characteristics, and there's a lot more that we put into it, right? So that would be considered a range 1. We saw that over the last 20 years that we've done that majority of the 930 to 1600s, right? 38% to be exact, right? Now we have other, if we're going to use, and I'll just draw it out. Right, that's the 930, and that would represent these something like this, right? Right, this would represent the 9 o'clock hour. This would be the 10 o'clock hour. This would be the 11 o'clock hour. This would be the 12 o'clock hour. This would be the 13, and then we cut it off at 14, right? So you can see we've just ranged between the 930 1-minute candle, right? Okay. So that would represent what we call a range 1 from an hourly perspective, and using the 930 as a fixed constant to make our decisions off of, right? Now we can do different things, right? And we've seen that the next highest probability is that we do something like this, right? We move away from the mean, aka the 930, and then we go, and when we're doing right now, we're expecting something called a directional width pullback, right? So we know that we're moving forcefully between 930 and 1015 away from the 930. So we're trending up. And then what typically happens is we go into an afternoon range for the rest of the day, where the pullback comes with one of the hourly lows gets wiped out. This has happened 32% of the time. So now we've got majority of the markets from 930 to 1600 ranging around the 930. And we have majority of the markets, right, trending away from the 930 and then going into afternoon range before putting a high day, a low day in, right? The other 2 possible scenarios is that 9, 10, 11 trend up, and then afternoon 12, 1, 2, right? One of them we revert back to the 930, leaving hourly gaps between each hour low and the 930. This happens the least. This happens 12% of the time over the last 20 years. Right, and then the last one, where they step on one side of the market, is that boom. Look at that. That was a great wargaming session this morning. Is where each hour cannot take out the previous hour low, and some of the characteristics that you see there is we spend the first 2 hours swiping the 930 or reverting 945 reversal, and then 10 touches, but we keep trending up. We respect the previous hour 50, and we definitely can't take out the lows. This happens 18% of the time. So now we've been able to identify reversion, reversal, trend, and range from an intraday standpoint. So now we can turn on models, right? And each trading model has its highest expected move, and we call it MFE, and its highest expected drawdown, MAE.
Yeah.
All right. So that was a quick, hasty class. There's a lot more that goes into each characteristics that we look for, but that's it, right?
So when you're determining the conditions, it's purely based off what's happening on this current day. Do you guys go to like higher time frames? Are you looking at like a 4-hour chart and
Yeah.
marking off key levels on the higher time frame as well? Does that add confluence to everything, or what's like how
Absolutely.
important is that to you?
Absolutely, because higher time we use previous session variables that determine high day, low day, and probability levels, right? But then we use the higher time frame from a simplistic approach. Are we above NFP Friday and previous month 50%? If we're above NFP Friday and previous month 50%, we know statistically we spend 70% of the monthly candles are green candles and 30% are red candles, right? So
Okay,
70% of green candles, 30% of red. So let's go to this day, right? You can see clear as day, we're above previous month 50 and NFP Friday, 70% green, 30% red. From an intraday perspective, that tells us to expect those lows of the days to happen between 1819, 03 to 04, or 9:30 to 10:30, and they expect lows of the days to happen in the morning session, and then highs of the days to happen in the afternoon, right? So we align. So now all we have to do is solve, is the low of the day in, and how big is the daily candle going to be, right? And then we also have the ability, we call it candle science, right? To take any higher time frame, and I'll pull it over on my screen, and to say, hey, this is the open, high, low, close on the NASDAQ using the daily. This is what Friday and this is what Thursday did, OHLC style. What is the probabilities of this day as it happens? And we can do that from a 12-hour. We can do it all the way down to the hourly, the 3-hour, the 4-hour. So we can keep those higher time frames in mind and start aligning it with what the sessions are doing.
So interesting, man.
I want to add
please.
a little bit to the RR conversation.
Yeah, please do. I was
I like
going to
this.
I was going to
Yeah.
ask some questions about that. So like, that's a good transition. Let's do that.
Let me see can you flip over to my screen, Zach?
Yes, sir. Yes. Here we go.
Okay. So look at the short that we took today. Okay. This short took 0.01% drawdown with a stop of a 0.08% stop with the expectation of a 0.2. So if you were to actually measure this from an RR standpoint, this would be a 2.5. That's pretty good in terms of, the industry standard of what they tell you need to do. Other days it might look something like this. And I just want people that, if you guys are watching us trade for the first time, I hate when people like try to come off like they're this best guys. Sometimes I'll take 2 to 3 losses before my trade hits. It was a great day. And this is an example of when you master the same kick hundreds of times. Sometimes you do it. It just looks easy like this, but by no means am I like this master trade. I take stop losses just like everybody else. But let's take a market open where, let's say the market open was a little bit bigger. And let's say we didn't, you see how today, Zach, I was showing you, look at all these levels. Left and downside.
And his internet's going out. There you go. Austin, you there?
Oh, I think
Am I back?
You're back.
Yeah,
You're back.
you're back.
You're good.
My bad.
No worries.
So we took all these levels, right? We had all these the distance between the catalyst of when I was short to my expectation, my reasonable expectation of price is these statistics. And these statistics give us checkpoints. Okay. And so today the checkpoints had a lot of meat on the bones, but sometimes maybe the checkpoints are the statistics when, let's say we break above market open, maybe it's just this. And maybe sometimes the trade is going to be 0.1% TP. Maybe it's not anything crazy. And so if that's the case, it's like a temperature gauge. Sometimes it's a really good positive 2.5 risk to reward, or I don't know what my trading view chart's doing. There we go. Sometimes it's a 2.5 risk to reward trade. Sometimes it may be a 0.7 risk to reward. Sometimes it may be a 1.3 risk to reward. And so my trading is never a static, it's always this or this or this. And I think that's where a lot of people kind of go wrong when they're wondering why their risk management is kind of like a little bit subpar to what their expectations are. It's because they're trying to form fit, because everybody says every trade has to be positive. But is this not a positive number, Zach? If I tell you 0.44, is that above zero? So it's not a negative risk to reward. And every trade is not 0.44. It's that when you structure your risk to objective probabilities, and the way that you're structuring risk is positive, aka I'm not putting my stop like this, right? We're not just going crazy. We're still using reasonable stop limits of where price would invalidate our idea. But when you let the statistics just play out, this does a few things mentally. Number one, what's the biggest thing every trader has? FOMO. Oh God, I'm in profit. Do I need to get out? Do I need to get out? Do I need to get? No. These numbers give me peace on the charts, just like how when I diagnose you saying you're either a healthy adult or a not healthy adult, the doctor doesn't sit here and have to look at the lab results and say, oh no, I think this. No, the reference ranges tell you you're either healthy or not healthy. These numbers here either tell you there's meat on the table, there's meat on the bones for this trade, or there isn't. And so now you have to decide, okay, well, is this a reasonable expectation of price movement where all these different levels are that tell us this level's been hit 80% of the time, this level's been hit X amount of time. And then all I got to do is every single day, I just have to click the button. My stop losses do the worrying. The statistics do the consistency. I don't do the consistency.
And then one thing I want to add that is more important than a positive R or negative R, right, is the position size. And those two main.
That was about to be my next question. How do you guys go about position sizing? You're on it. Yeah.
So listen, like position size, obviously the number one decision making is the most important part, right? Having every single part of your trade plan should already be designed before. You shouldn't be making decisions as you're placing trades. That's a no-go, right? But like when it comes to the position size, and there's multiple ways of doing it, we focus on two, right? Fixed position sizing, meaning that like we take the same amount of contracts every single time. Now there's some pros and cons to that. If you're a pure mechanical based trader and you've captured the MFE, MAE, right, that's cool. But the way most people do it is, and it's wrong, right? They'll say, hey, I'm going to place my stop above this structure high, and I'm going to enter as close to that as possible because that structure high is my invalidation point. However, they haven't measured, is that stop the proper place in the proper MAE for that stop, right? And then the problem with that is now I enter and my stop being above structure highs or lows, my stop loss, my expectancy of that loss is going to be different every single time. So now we have an open expense, right? Which means like I cannot control how many times I can lose in a row without blowing up the account, right? So one thing, if you do a fixed position size, meaning you take the same amount of contracts every single time, no matter what, you have to put either a percentage or a cost allowance on how much that stop's going to be worth, right? So 225 every time, right? So you can close that stop into a fixed stop, right? A closed stop, right? So now we can start controlling that loss and we can start trading off of our losses and our business expenses without blowing up, right? And we've all been there where we were like, I'm going to enter here. My stop today is going to be above this high and it's going to be worth $400 loss if I get lost and stopped out. But then the next day it's worth $300 and the next day it's worth $600. Your expectancy is not predictable, right? So like to be able to use a risk to reward concept, you have to understand how to control the expectancy, right? And then you have your risk per trade, right? So, and this is the cool part about it. Like, let's go back to that $4,500 prop account worth a drawdown before I blow the account. If I'm going to risk 5% risk per trade, that means every single stop needs to be worth 225. Now I adjust my contracts based off of how close my entry and my stop are. It's still going to be worth 225. So there's no need, and we use a dump pouch, but like, I'll just draw it out. Right? If this is my entry and I have, let's say 20 handle stop, then whatever entry and stop allows me to maintain that 225 worth of stop is how many contracts I put in. So if like, that's why ES is a better move to trade than NQ because I can get cheaper expenses on ES and I can get more contracts on. So the times I am right? My target's worth more because I'm in more contracts, right? Now, if I have the luxury of grabbing a really tight stop and entry location, then I'm going to enter more contracts. This is still worth 225. And then if it does hit, right, it's so much better, right? And then we do something called pay the trader line, right? Which says if I'm entering, like if I do get my entry between if any of my trades are less than 10 basis points, which is right now market's 24 handles, like it's either TP or stop out. But if it's over 10 basis points, I always find a way to cover the queen and cover that risk, right? So entries here, stops here, 225 would allow me in 13 contracts. At this point right here, and it's already calculated, I'm going to take 6 of those off. So now I've collected cash flow. I've covered the risk, the 225. And then if it goes to target, I can hold on emotionally because this is a risk-free trade for me, right? And these are stuff that like we try to promote more than we do the strategy, because like we said, we've backtested enough strategies from everybody to know that intraday you have a 15 to 60% probability if you just are a mechanical-based trader.
Uh-huh.
Right? And this is what keeps you in the markets going any kind of strategy, doomsday drawdown. I do have to take a call, and I might be jumping off early today, so I'll be right back.
Chris?
No worries, man. That was, I mean, guys, I don't think I've met any traders that are this nuanced and in depth. And it's just like the chat loves you guys. I mean, you're like blowing my mind. Honestly, it's even hard for me to just follow in real time. Someone said in the chat,
It's a lot. It's a lot.
But it's all so coherent. And once you hear it, you go, yeah, that's so intuitive. Actually, it makes sense. But
yeah,
you're so right that there are these like certain things that the retail trading space has just been beaten into our heads. Like your trade must be at least 2R. You must have an X amount win rate, like all of these things. So one thing to ask about what Matt Mickey was just saying. So you guys do like to focus on a certain dollar amount of risk relative to the account size you're trading in most cases, but you'll just flip your contracts based off where your invalidation is going to go. Do I got that right?
Exactly. So the risk isn't static, right? And I think the best way to answer that is nothing we do is static, right?
Okay.
Because the market is never static. So for instance, this market open, if you go back to my screen, today's market open was 0.08%, right? So the invalidation, every time I'm taking a trade, the invalidation is an objective. I like to call it losing against the winning team. I want to lose against the winning team. I know there's other traders here that take, like I get it, right? People try to trade this way with tight stops and stuff like that. But for me, because people say it, I totally get that, right? It is a cheap trade, but I don't want to spend money unless I have to, right? Like I don't want to start let's say a coffee. I'm going to take an expense. Every single day. Like I want to account for, if I have to pay for a trade, it's going to be against when I am completely incorrect. So if live price gets above here, I'm incorrect. I'm no longer short-minded. So I have to say, okay, well at 0.8%, what is my position size that's going to risk a healthy account balance in relation to the account balance I have? And then I'm also scaling that up depending on, have I taken a payout? If we're talking prop firms, am I outside of my 14-day risk of ruin? If I'm outside of my 14-day risk of ruin, I will add maybe 1 to 2 additional micros. That's specifically how I trade. So yeah, it's dynamic. It's never, I'm only risking $200 or $300 or whatever.
So, well, first off, I think what's funny, Austin, is the last time that we did do a quick live stream, I was trading very similarly to what you just described, trying to keep my stop as tight as possible. The cheaper the trade I could possibly get, and I would try to hold out for as long as possible. And, that can work to a certain degree. I had some success doing that. But in the last year and a half, I've really kind of began to adopt an approach similar to what you guys are trading, where for me, it's more about what price can actually give me. I'm less focused on a specific R multiple, and I'm more focused on taking low-hanging fruit. That's what I like to call it. Take the low-hanging fruit. If I think the market, I'm way less statistically based than you, but just generally from a technical analysis perspective, if I think for whatever reason, the market can give me 50 points, right? If I can target 15 out of those 50 points, I just have a much higher advantage of taking my low-hanging fruit, coming back tomorrow. So also limiting my executions. That was huge. I used to be in and out of the market all day into PM sessions, still trading. Like you said, it's an addiction. So the last like 6 months especially, I've had a really good run on prop firms, and I want to talk about prop firms with you a little bit. But one of the biggest advantages to why I went on such a good run recently is, first off, taking low-hanging fruit, higher probability trades based off my analysis, and number two, stopping after I take my low-hanging fruit. So a lot of people think if you're a scalper or a low time frame trader, you're in and out of the market all day looking for new opportunities, taking a few points here, a few points there. And for me, it's the exact opposite. I really try to limit my executions as much as humanly possible. So I look for one, maybe two trades, and I am done, win or loss. And that has been, like, forget about technical analysis. Just that trade management has done wonders for me, more so than any technical analysis. So,
well, this is a business, right? Like if we want to do this long term, this is the thing people forget about, is they're sitting here trying to make money and you know, make this quick money, that even if you are trading a positive expectancy, you know, profitable strategy, if you're stressed every single day on this chart, guys, we're human beings. We're not robots. We're biological creatures, and that stress is going to kill you. So you want to strive to do something, because people get so caught up in, I want to make money. I need to win. I need to win. I need to win. You forget to think about, you are the operator. You are the CEO. And if the CEO is every single day upset, stressed, pissed off, whatever, you know, negative emotion you want to think about, do you want to be like that for the rest of your life? No. And because I want to do this for the rest of my life. So I want some sort of peace. I want some sort of anchor, confidence, because that confidence is what lets me stay in trades, even when they go right back to my entry and then go to my TP or my stop loss. That's what lets me let the trade go to my stop loss. Like, all that confidence is what we're doing to create positive momentum for good habits in the market.
Yeah. I mean, I couldn't say that better myself. I was talking about this the other day on stream, that I hit a point maybe a year and a half ago where I was at my breaking point with exactly what you're referring to, which is like being stressed and sad and angry or happy, just having my emotions all over the place, to a point that I was like, I cannot do this for another year. Like, I can't live like this. It was a big thing for me. So again, just finding ways to limit your emotions. Like you said, we're humans. We are not robots. I don't like when people say you shouldn't have a feeling.
Can I just go over real quick? I just want to point out, and this is for the pack. When we did our war game analysis this morning, we said, number one, we haven't completed the 4 steps, right? We said P12 mid had a 94% probability. London OU had a high probability, but we knew that the low of the day was most likely in. So we failed to go the 10 basis points out of the 05. So if we start breaking the upside, like, listen, you've got to let go of the sells, right? Like, you've got to understand that we have 4 steps for a reason, and we just responded in Q1, possibly putting in a Q1 low off of the P12 mid, right? So obviously we want to think DWP to the downside, but this is already showing us off of the P12 mid, the probability of coming back up and closing above, taking out previous day high, right? So just pay attention, and pay attention to the instat low or high that we put in this next 15 minutes. All right, sorry about that.
No worries. Also, guys, I do want to talk a little bit about prop firms now. Like, I know, Matt, Mickey, you started trading props recently. I'm guessing you still trade personal. Austin, too, I'd love to know, what prop firms do you guys like to trade with? And do you have different strategies around different props, right? Because there are different conditions sometimes. Like Top Step, for example, you have no consistency rule. You have to take a challenge that's going to take at least 2 days to pass. Where nowadays you also have instant funding. You're going to have a really tight consistency rule. There are different drawdowns. How do you guys approach different props, and do you change up your style based off of that?
So I'm going to pass this one off to Austin, but I'll answer it real quick. Like, I trade Lucid now, and that's because anything in the prop world he does, like, I trust him. I've seen him take payouts in these certain props 12, 13, 14 months consecutively. So, like, whatever he trusts, I trust. So right now I'm on the Lucid Direct, and I trade that just like I would just a personal account, right? And I do trade live still, but I do it because I'm doing other people's stuff, so I can't really promote that. But, like, this dude knows how to portfolio cycle, and I hope he gets into it, because this dude's a prop genius, like way smarter than I am with it. So listen up to Austin when he talks through this way, because he's a freaking genius and he's melted in front of. And this dude, and everybody thinks our Swan's the blackest, but like I got to give credit where it's due, right? When I was looking for people to partner with, I said I want transparency. I don't want the people who, take 1,000 little paper cuts trying to take the top and the bottom, and then they show you just the one that worked, and they ignore to show you the ones that didn't work. And I definitely don't want to see. And I definitely don't want to see the individual who buys hundreds of prop accounts and only shows in the prop flipping, and there's nothing the matter with that, right? Like that's a way of making money. It's a strategy. It's a business plan. But don't say you're a trader when you're just flipping prop, right? So Austin, what he does is he trades every single day live. He calls it beforehand what his plan is, and then he shows everybody the same account that he manages month over month and when he pays out. And so this is a dude you want to listen to because he's honest, got integrity, and he's got character when he does this. So that's dude's the best in his space. That's one of the main reasons I stuck with him.
Great intro, man. All right, Austin, take it.
I appreciate that, Mickey. Yeah. So, first and foremost, I honestly, I don't understand why people prop firms get such a bad rep. Guys, at the end of the day, we're here to make money, and if you have a skill that is scalable, if you have a skill in this market of extracting a positive net dollar, I'm a business, and the business is ROI. What is my return on investment? You can't convince me that the ROI is better right now. This is gonna trigger so many people, but show me the numbers. Show me the ROI percentage of trading a cash account, and then do the same drawdown equivalent. Let's say we have a $6,000 cash account versus a $150K funded account. That has $6,000 of drawdown. You're trading the same $6,000 limit. I only have to pay $500 for that $600 draw, or whatever the dollar value is, versus I have to pay $6,000 to get $6,000 to draw down in a cash account. And then in addition to that, I can trade simple. I can treat it like a normal account and get a really good, in one single payout would ROI completely the $500, plus now it's all gravy. Show me another I invested in, I still invest in real estate, but
nothing else in the world. I always say this. Do you guys understand? In real estate, if you can make 15%, that's a home run for a year. 15% annual. In the market, 10 to 12%, maybe 15% in the market. That's a great year.
Yeah.
I can take a 150K funded account and trade it for a month, 2 months. Oh my God, 1 to 2 months. Yeah, 1 to 2 months and make 100% ROI plus whatever on the top. It's insane. It's not being a degen, right? So with that context, I like to do what's called portfolio cycle. I like to look at my accounts as a portfolio. So whatever accounts I have, and every single day, I did it just this morning. I'll see, okay, what funded accounts is either right now. Actually, it's kind of funny, Zach. That short that we took on stream, that qualified me for another payout today. So we got a cool little payout on stream. But beautiful. That account, because it was so close to payout, I only needed one more good extended cash flow trade. So I hooked that to the copier. And then I don't copy trade every single account. I will take, let's say if I have, let's say 5 accounts, right? 5 funded accounts. Why would you copy trade all 5 accounts at the same time? All you're doing is amplifying. Yeah, you're amplifying the gains, but you're also amplifying the losses. There is no edge. Every time you guys trade,
I agree.
You need to think about, you need to think like a trader, right? Where's my edge? There is no edge in copy trading 5, 10 accounts at the same time. So how do I do that? Well, if I trade and I know that my average drawdown, let's say I take a drawdown of, based on how I trade, a 2-day drawdown streak. Let's say the common scenario is if I do take a losing streak, it's 2 days. Okay, well, how powerful is it that if I know that my typical drawdown is 2 days, instead of copy trading all 10 accounts, 5 accounts, how many of you ever have, and they have to all experience that 2-day, why not take, of those 10 accounts, trade 3 to 4 of them at the same time, and then the next day, another 3 to 4, and then the next day, another 3 to 4. Now what are you doing? You're literally making it stupid hard for you to experience what Mickey was saying, doomsday scenario. You're making it practically
I'm not ever going to say impossible. You're making it very, very unlikely for you to experience max loss, where if you know your edge, and this goes all the way back to, if you don't know your edge, everything I'm saying is useless. If you don't know what your median and average losing streak is, if you don't know what your budget of the day is, if you don't know what your max loss is, and I'm not saying max loss just because you pooped out a random number, I'm saying max loss because you know your edge, that on the worst case scenario is double your median expense. So if let's say my median drawdown on any given normal red day is $700, I'm going to multiply that times 2. Okay. So now 1,400 is my doomsday. I can't do nothing. I'm going to always stay below that 1,400. So let's say it's 1,100. Okay. So now I have 10 accounts. Only 2 to 3 of them ever could experience 1,100. And then the next day, guess what? I have a fresh portion of my portfolio where only a third or a fourth of my portfolio has experienced that drawdown. And then I just rinse and repeat. It's the God's next. It's the eighth wonder of the world. It's God's gift to trading.
There's also a psychological component to this, right? So I do the same thing. I do copy trade, but I don't copy trade my entire portfolio all at once. You know, I like to spread out my risk. I learned this term from JD, who we both are, all three of us, I think.
Yeah.
I love
we love JD. He comes into our community and trades all the time. Like, he's a great dude. Great dude,
and really solid trader. So he I don't know if he coins this term, but he calls it risk sinking, right? So flipping through different props. And this is one of the beauty of props, right? We have this opportunity. Like, you just don't have that with a personal account. So I do exactly that. I have a couple of firms that I'm trading. Right now I'm trading with Tradeify and My Funded Futures. So what I do is I do like to copy trade all of my accounts. So I have 5 Tradeify accounts. I have 3 My Funded Futures. But what I do is if I take a loss, my first loss of the day in the morning is on my Tradeify accounts, I just move over to a different set of accounts. Instead of feeling like I want to get that profit right back, right? Or I want to make the money back. I've just noticed for me, there's a psychological component to it that if the worst case scenario happens and I lose 2 trades in a row, well, now I'm only down 1 trade on each set of accounts. So it helps me psychologically and it spreads out my risk, right? So just like you said, I'm just trying to avoid the risk of ruin and blow out my account.
That's it.
It's one of the beauty about prop firms that you get that. And like you were just saying,
and people say exactly. The ROI is big, but here's the thing. You can do the same thing with a cash account. There are multiple brokers where you can have sub accounts, right? Sure. So for those of you that are super against props, you can get NinjaTrader and have 4 sub accounts, fund $2 to $3 grand in 4 different sub, and treat it just like a portfolio.
Yeah. True.
Yeah, like you have $10,000 in a live account and you can break them up into 2,500 or 2,000, whatever you want to do. You can do the same thing. And most big traders do that through, like everybody's heard of Ray Dalio and the all-weather portfolio. That's what he does, but with different assets. You can do the same thing with intraday live cash accounts as well and strategies, right?
Also, guys, so I know you took your trades. I know, Matt, you trade mostly on the ES. Austin, I'm not sure if you took your trade on the NQ or the ES, but you guys have so much data compiled. Okay. So you guys have so much data compiled on the NQ and the ES. Are you trading other markets or are you specialists in one?
So a little bit, like I'm starting to build business plans around, like, because I have data in everything, EU, BU, gold, Bitcoin, all this stuff. So now that I'm consecutively making money intraday, right? Like I'm going to see what other edges out there. And Austin does the same thing with his gunship, which is pretty cool, right? So it's like, right now we primarily trade NQ and ES, but like we had the ability to look at RTY and build systems for RTY and gold and all this stuff as well.
So you guys are beginning to experiment with other instruments.
Yeah, I'd say for me, the other instrument side of the game, and maybe this isn't like super practical for most people, but it's going to be algorithmically, right? So this has been like over a year of development we've been trying to do, and I don't want to go super into it because people hear the term algo and they're like, what, money printer? No, it still requires work. But you know, honestly, to answer your question, Zach, the reason I stayed at NQ, and it has nothing to do because NQ is better, nothing like that. It's because I can put all of my focus on one instrument, and the other things that I do is I long-term invest, right? Like trading isn't in terms of financial exposure, the financial markets, day trading is only a sliver. I sell options to collect premium for long-term dividend growth stocks. I'll mid to long-term swing trade, QQQ. I'll take what I do on the intraday level, and I will swing trade the quarterly and the monthly chart, or the 6-month charts of what QQQ is potentially doing for the year. And so day trading is like the fuel to the fire of the highest risk that I do. And then I take the profits, and here's what I do as well. I don't take my profits and if you're looking at my chart here, okay, there's different buckets of income that people need to understand. And if people talk about, yeah, we need to treat trading like a business, this is what treating it like a business is. If day trading is the highest risk, right? Highest risk bucket. Why would me as a business owner, why would I take revenue? Because again, detach trading for a second, just picture this like a normal business. Why would I take revenue that I have earned, net revenue from the highest potential bucket, and then why would I do this right here and put it right back into it? I want the money that I work hard for, I want it to continuously grow. So what do? I de-risk the cash flow. I don't take profits that I get from payouts and profits that I get from my cash account. I don't take it from day trading and plug it right back into day trading, because some people, they'll say, well, take your prop firm money and put it in a funded a cash account. Well, yeah, you could do that, but I'm giving money that I've already has been in a high risk environment, and I'm just putting the same echelon of risk on it. So what I'm going to do is I'm going to de-risk it. I'm going to put that money in my broker account, and that's going to be money that I'm either buying long-term dividend aristocrat stocks on. I'm selling if I can't see a buying opportunity, but I can see that I want to get a buy maybe 5 to 10% below, I'll sell options on it, a cash secured put, to collect the premium. Like, there's other things that you guys can do in this financial market to also hedge your intraday risk. And you don't have to be a multi-millionaire, right? You can have, once you take and you find consistency in day trading, you can take this and really build an empire. And so I don't ever really have the need, but I'll say this, I never have the need to say, well, let me go to RTY or let me go to 6E or some other instrument. I don't really have that itch or that need, because I already scratched that itch in the other parts of my portfolio.
Yeah, and I would say, like, for most young traders, you just need to be consistent with one kick 1,000 times, at least a couple of years in that one kick, right? And then when you start seeing that consecutive, right, payouts and all that, right, then you need to find the risk-free return to utilize your capital with. Pay off those 17 to 25% interest credit cards of debt that you have, right? Start thinking about what debt you have and which ones you do. The whole Dave Ramsey thing, right? Like, if your company that you work for, right, offers like matching, put that risk like into that, right? Because they match you 5%, then you better be putting 5% in to get that 100% risk-free return, right? Start finding other ways of pulling easy returns out of that capital that you pulled out of these props, right? Like, you have to do that. Like, I'm not saying like go become an Airbnb specialist like Austin is, but I am saying, like, now that you've mastered one kick, one market, and you can pull consecutive payouts from it, and you can bare knuckle fist fight that thing in every type of win-loss scenario, now you be smart with that money, right? And find easy ways to get even better return. And people forget about the credit cards and the cars that they already have that has an interest rate associated. That's a free, risk-free return if they just pay it off, right?
Dude, so I mean, there's so much, so many gems right there. And you guys are talking about kind of where I'm at as a trader myself. So I think it depends on where you're at in your journey, right? Because I only until about a year ago started making money that is actually changing my life through prop firms, right? So in the beginning, I was totally that guy reinvesting money into more prop accounts, right? And At first, it was really just because I'm paying my tuition to the market and I'm learning how to trade. Then I started getting bigger payouts. The payouts started coming in more consistently. And I went from trading, okay, 1 or 2 accounts to now reinvesting into more accounts. Now I am at a point where, 2 years ago, I couldn't afford to buy 20 Apex accounts. I couldn't afford to buy 5 straight to funded accounts. Now it's no problem. So I think reinvesting when you're at the very early stages and you have no other avenues makes sense as long as you're beginning to make money consistently. But I am at that point right now. So I've started investing in the QQQ. I started putting money into the QQQ for the first time in April. And part of me, this was a little bit of luck, but I caught that bottom, man. And it was
Let's
amazing.
go. You bought when there was blood in the streets, baby. Oh my God, we're going down. Bear market. Shut up.
Yep.
So, dude, right, and that's where there are some differences here. Because day trading, do you always want to buy when there's blood in the streets? No, but for long-term investing, absolutely. I mean, the markets, for the most part, are designed to go up. So, if I'm buying when there's blood in the street or there's crazy panic selling off, I think it's the right time to buy. If you're not going to worry about that investment for a year, 2 years, 10 years down the line, that pullback means nothing. It's just a better opportunity to buy, right?
People let their day trading brains bleed too much into a swing trading perspective. That's what we find a lot of the times.
Yeah, no, that's
all
absolutely.
right. So a little update with our system. We've obviously completed the 4-step reversal. So, right, from a statistical standpoint, right, we know that the structure, the highest probable structure is all the way down, and then we'll use New York 2 to figure out. Right now, we've got the high of the day locked in, right? There's no reason to doubt that. Now we're trying to see, we've hit the levels. We've come down to the London OU and the Globex Open, which had the highest probability of getting hit today. Now we want to see, is this just retracing the 12-hour footprint of the wick, and then it's going to reverse, right? Or are we going to make a new low of the day and continue the afternoon for an end-of-day low of the day? Right now, right, the highest probable low of the day was at 1800. But you have all this data right here that can point to end of day low of the day or afternoon low of the day, right? So now we get to pay attention. Live price is saying we want to make a new low of the day. We've got a statistical high for this hour, right? We're expecting a Q3 low and a Q4 low and then an 11 o'clock. But if we turn around right now, right, we're going to be paying attention. Can we breach the last 15-minute high, and then that'll set us our 3-hour up for apex versus the high probability line, right? So right now, you get to see some of the things that, because with our traders, we're like, hey, dude, we know the most important thing is for you to realize nobody cares if you make money. Nobody cares how you trade. The only people that really care if you make money is your ex-wife, your wife, and your kids that you support, right? So now what we do in the boot camp is we force them to say, hey, this is my life, and now I'm going to build my business and my trade plan to reflect that, right? So we do have traders that don't just trade the 930. We have traders that trade purely, like Pat Cody, the structure dude, and Pack Trade. He trades like valid highs, valid lows, and he's collected all the stats on the 3-hour line versus the apex. And so right now, what he's looking for is in the next 15 minutes, right? If we can't take out this 15-minute high or this 5-minute high, the last 5-minute high, then we're expecting this to be a 3-hour line, which the daily profile supports. But if we can start taking out highs, previous 5-minute highs and 15-minute lows, then we're expecting 9, 10, 11. There's only 2 possible scenarios that it can be, right? When you look at 3 hours, right now we know that the highest probability is for the next 3 hours to be like this. But if we start seeing us bounce off of the previous 12-hour, the 18 to 06 wick low, right, it will start showing right now in this 15-minute or the next 15-minute by huge displacements, breaking 5-minute structure highs in 15 minutes. And then he'll take a trade that supports this 3-hour apex where 11 o'clock comes and takes out 10 o'clock's high. And that would support the DWP price action that we talked about when it came to the 4 classifications. But I think right now, right, I think it is almost time for us to jump off here, right?
Oh, if you're asking me, yeah, 10:30. We usually do 9:30 to 10:30. So I mean,
okay,
that was an awesome time, guys. Seriously, you might be one of my favorite guests, and we've had a lot on
thanks,
in the last 3 weeks. Seriously, I mean, you guys blew my mind. I just let you guys run and talk. I didn't even take any trades. I'm like sitting here learning. You know what I mean? So thank you so much.
If you ever want to come,
values,
if you ever want to come to the boot camp, like it's 3 months. Why is it 3 months? Right? Because I want you to spend time digesting everything I teach you. The first thing we teach you is how to read a market live. Because if you don't know how to know when the market's picking the 20% over the 80% probability, you have no business trading statistic or period, right? So we teach you the live markets, right? Everything we teach in the live, how to read a live market is based off of statistics, surprisingly. And we use fixed constant decision points, right? So we're not looking for PD arrays to form a structure. We're using the same thing every single decision point that we make. And then we teach you statistics, and then like we teach you how to, align live price with statistics. And then we go into phase 2, which is now let's build business plans and learn MAE and MFE of strategies and building risk profiles to the measured moves. And, like we take it as just like I've seen many a times with the professionals that they did, right? We take that approach. Those 3 months, they like get you the whole approach. Like we don't just tell you a strategy, right? We force you to master that strategy, to see it, and then to build a business plan, a trade plan, and a risk profile around that strategy using data, right? So you're more than welcome. The next one is January, and you're more than welcome to come join it. You got to wake up at 5:30 though.
Dude, that's my life already. Bro, trust me, I'm up 4:35 a.m. every day.
Bingo. That sounds good.
I'm in there. Guys, thank you so much. Seriously, it sounds like you have one of the most in-depth mentorships groups that I've ever seen. So many people out here, they have a single course, they have a Discord, they just trade live. I mean, it seems like you guys really genuinely care, and I think that's
well, dude, it's changed, bro. It's changed our lives. Like, you hear a lot of goofy people be like, oh my, no, like the fact that me, retail Rick, right? Like just a normal everyday Joe, I don't have to sit here and decipher why the market makers are hunting my stops. None of that stupid crap. But I'm actually here saying I'm a retail trader. I'm a retail dude in this space. And I'm able to articulate more often than not. Sometimes I'm bad. But more often than not, I can articulate a multi-trillion-dollar a day instrument. Like how much, like that should give anybody goosebumps. And so if we're able to do this, one reason why we live trade isn't to copy trade us. That's goofy. We don't teach a strategy. We don't say, look at this PDF and put your stop here and your TP here. We teach you how to fish, because that's what trading is about. Trading isn't about, and this is where so many get, and if I could end with something, I want you guys to understand this. Anybody listening to this, you don't have to nobody needs to understand how you trade. You could be the craziest lunatic in the room. You could say, yeah, you want to joke about my bat pattern or my moon cycle? Watch this, right? Like, it doesn't matter how you trade. What matters is, does it make sense to you, so that way you can consistently engage with something that is completely out of your control. You can't predict what this next candle is going to do. But if you can consistently engage with positive risk management, that's all you have to do. But if you can't do that, if that doesn't make sense in your brain, you will never have long-term success. You will be chasing the next strategy. You will be chasing the next thing. Guess what? It's okay if your strategy goes into drawdown. It's okay if your strategy has a losing day, losing week. That is what normal models do. What isn't okay is when you build a plan, when you spend all this time and hours and energy into articulating what you want to do on this chart, and the moment life hits you in the face, what does Mike Tyson say? Everybody has a plan until they get punched in the mouth. When you get punched in the mouth, that's where your risk management comes in. You should be excited to let your strategy get punched in the mouth a little bit, so you get to see either what the weaknesses or the strengths are in the risk management that you have spent hours trying to build. And so when you can objectify this market the way that we do it, that's why we have so much passion trying to be, better than anybody, or say, look how great we are. It's that, dude, I'm able to do this every single day when most people tell me that, oh, you can't trade on Mondays. Or most people say you can't trade with this, you can't trade with that. I do this every single day because I made it my way. My way isn't better than Zach's or whoever else has came on here, but my way is good for me. And that's what every single person on this stream should strive for, is finding what is good for you, that gives you peace on the charts, not what gives you winning trades, not what has a high win rate, but what gives you peace on the freaking chart, because this market will take everything from you plus interest. And that's what I'll end with.
And for me, it's about like the working class. Like I know that most of our people are either veterans, nurses, police officers, factory workers, just people just trying to pull, cash flow enough to pay cell phone bills, pay car bills, just a little bit of to help them out. But the reality is now they've been manipulated from social media, everybody's been manipulated. They lose the value of their dollar when placed in trades because it's all been gamified. And it's like, dude, that breaks my heart so bad because they've been taken advantage of so many times and by so many people. And I used to work on the institutional side for collateral and margin. And like our biggest goal was, how can we charge you more waiver fees and wire fees and commissions? Like, we're not worried about the yield. We're worried about making a market and collecting ours from institution to institution. And it's like the same thing's happening at the retail space. So like, how can we promote responsible growth and realistic expectations to those working class people that really make the economies move, so they can pull $100 extra a day out of the markets, right? Because that's all you need, right?
Damn, guys, I don't want to say anything else. We gotta end it right there. That was perfect. Again, thank you, Austin. Thank you, Matt, Mickey, for coming on. So grateful that we got to have another chance to chat. And yeah, let's do it again soon, because I feel like we just scratched the surface with you guys. I may actually take you up and join that boot camp. So I'll keep in touch, guys. Later. Damn, guys, that was just one of my favorite chats I've had on stream so far. Man, shout out Austin and Matt. That could not have gone better. W's for them in the chat, guys. If you liked that one, please remember, we're always trying to get the best guests possible. I take a lot of thought into this. I'm not just trying to get, the first person that's willing to come on, right? I want to get people that are actually going to help you guys out and who have something to say. So just shout out the Pack Rats, man. Seriously, one of my favorites. But yeah, guys, listen, we should definitely run some giveaways now. I got some more accounts to give away. So anyone that's still here, stay tuned. Let's do this. Let's run a quick giveaway and give away some Blue Guardian accounts. How does that sound, guys? There we are. Ziggy Pack Trade. Thank you, Zach, for having us. Thank you guys for coming on. Truly. Austin says it wouldn't be a stream unless my Wi-Fi goes out. Thank you guys so much for having us. We need to run it back. We will definitely run it back, bro. Bro, that's so funny because Austin said that to me on DM. He was like, I promise there's going to be one or two technical issues. And I was like, I don't think so, man. Like, StreamYard's pretty chill. It's super simple. But the man proved me wrong. But no, there were no issues there. I mean, we had audio the whole time and the screens. It was beautiful. But all right, guys, thanks again so much for coming on. So let's do this because we're going to be on stream till 12. So we're still going to be running the stream. I haven't taken a single trade yet, and I might begin to be – I'm kind of seeing something set up. So we're going to talk about that. But before we do that, let's run this giveaway. Let's give away 2 Blue Guardian accounts. So what I want you guys to do in the chat – hold up. Let me think of a good keyword. Let's do this. Type in Pack Trade group to enter the giveaway. Put that into the comments in the chat, and I will go ahead and take a quick break. We'll take a quick 3 to 5 minute break, and we'll announce the winners of the giveaway as soon as I get back. So no reason to exit the stream. Stay tuned, and we will be right back with that giveaway. All right, go ahead and get your entries in. Peace. All right, all right. We are back. What's going on, traders? All right, so we can get this giveaway going. Let's do this. Let's get my screen up. And let's do this, guys, because I want to make sure I don't miss any of y'all's entries. So even if you already entered, do me a favor. Go ahead, type pack trade group in the chat one more time. I'll make sure I get everyone's entries. You got 30 seconds. So let's run it up. And remember, guys, starting tomorrow, we're going to have our usual sponsors, Top One Futures and Blue Guardian, but I will also be giving away Tradeify accounts. And it's going to be 100K Tradeify accounts. So the biggest account size that we've given away so far, I'll be giving away 4 of them, 1 each day for the rest of the week, starting tomorrow. So if you want the chance to win a 100K account with Tradeify, just remember to tune into the stream. We'll be giving 1 away out a day. But all right, keep getting your entries in. I'll give you guys 10 more seconds. Keep them coming. Keep them coming. 5, 4, 3, 2, 1. Okay, that's it for the entries. So let's do this. Let's get him in here. And honestly, I think I'm beginning to see a setup for him for my analysis. Guys, I wanted to get short too. I wanted to do it, but I just didn't want to focus on my trade when Austin and Matt Mickey were just dropping gems. Like I had to be 100% focused on that conversation, which is a good thing. I'm not even complaining. But they're just so analytical, and some of the data is just so dense in a good way. I think it's simple once you begin to understand it, and it's intuitive, but it's just dense, right? So I needed to be hyper focused so I could really grasp everything that they were explaining, because there was just so much in there. But we'll see. I think there might be a chance for short continuation. I'll go ahead and we'll take a look at the charts in a moment, but let's give away these accounts. I promised we'd give away some Blue Guardian accounts, so let's get it done. Let me just get these names in here. If you were here Friday, we called out winning shorts all day. Honestly, we've been running this stream for a few weeks now, and I've been doing really well. I think on one hand, I've definitely been a little bit more cautious with what trades I enter and exit on stream, because I want to make sure I give out decent trades. I think it's been making me a better trader. I mean, we locked in a 10K payout just last week. Streaming and trading is very hard, but it will make you a better trader. I think it will. All right, let's get this, guys. All right, here we go. On 3, 1, 2, 3. Who's it going to be? Who's it going to be? All right. Shandu. Sorry if I butcher these names, guys. Shandu, you were the winner, but this is what I need you to do, okay, Shandu? I need you to type in the chat and tell me what your YouTube handle is, okay? So I don't just need your name. I need your actual YouTube handle. Otherwise, you won't be able to claim the account properly. So go ahead. I just want to see you in the chat and give me your YouTube handle. Let us know. Let us know. Where you at, Shandu? And guys, no need to keep typing in the keyword, because our entries are already in, okay? No need to keep typing pack trade group. It's over. All right, Adesh. Shandu, let us know you're in the chat, though. If you don't let us know in the next, 60 seconds. Okay, there we go. I see you. I see you. Shandu B6FU. Perfect. Thank you. Let me put these in the notes real quick. All right, let's give away one more. Let's give away one more. And guys, remember, you can only win 1 account per week, but also just always make sure that your country is not restricted with the firm that we're giving out. Sometimes your country may be restricted from trading, and we can't do anything, okay? We can't give you a different account instead, so just always make sure of that. But all right, guys, let's run it up. Let's do one more real quick, and then we'll get to the charts. So let's hit it. Damn, landed on the C's again. I feel like Chuck Galash has won recently. I feel like I need to run that one back. It is the beginning of a new week. All right, Chuck, you're the winner. You are the winner of the Blue Guardian account. Congratulations. Just please give me your YouTube handle in the comments, okay? Type what your YouTube handle is to properly claim your account, please. So I'm just waiting for Chuck to get in here. Let us know your YouTube name, and then we'll get to the charts, guys. C. Galash. Okay, perfect. Thank you, my friend. Thank you. Thank you. All right. And don't worry, guys. I got more accounts to give away. We are not done, okay? We are not done with giving away accounts. I got 4 more accounts to give away total. So we'll give away some more before the end of the stream. No worries. So stay tuned. But let's get to the NQ here because I don't know. I think I like some. I think there's some opportunity here. Later, Zach. Great stream. Thanks for having Austin and Mickey on. Thank you. Thank you, my friend, for tapping in. Much appreciated. But yeah, guys, all right, we got to see what's going on. So I do want to analyze kind of what I was seeing on the charts. We could talk about that. Hey, Zach, why do you like selling NQ? Haven't you seen buying NQ? Honestly, there can be buys, but I'm starting to think we need to take out some more liquidity on the higher time frames. We are just kind of in the middle of this hourly range, though. So, I mean, longs could make sense as well. But where we're at right now, I just want to see what the more obvious draw on liquidity is, and I want to follow momentum, right? So first off, I want to take a look at ES. ES is really beginning to get a bunch of stacked lows down here, so I think we could come for previous day's low. ES also took out previous day's point of control, right? So we are below the POC, which for me is that's a big way that I gauge bias, right? If we're below the previous day's point of control, I genuinely have an easier time looking for shorts than I do longs and vice versa. So this could really be a line in the sand for us, this point of control on ES. I'm trying to see if there's any key fair value gaps here. We're kind of tapping into one. And for NQ, same thing. We're back below the previous day's POC. We're bouncing from the value area low the previous day as well. So could we rotate? We could rotate back up, but I don't know. We swept this swing low right here, but I think we might want to go for a deeper sweep of this level and maybe even come down and take out this Friday low right here. So I don't know. I still kind of favor shorts at the moment. I also want to gauge the volatility real quick. Yeah, so like for a new low a day, we can capture up to like 70 points, right? So can I take 50 points out of that or 30 points? I probably could. But I'm going to be careful here. I'm not super interested at this exact spot. I'm trying to see if there's a key fair value gap somewhere. So we have an open fair value gap in here. And yeah, so we have this inversion. I think this is going to be my line in the sand, guys, right here. So on NQ, we have this 15-minute inverted gap, which also aligns with the previous day's point of control, right? This could be a good area for like a break-in retest to go lower, if we're going to go lower. So, I mean, positioning myself over here is not terrible, but I want to give it a little bit of room. If I can find a lower time frame confirmation to kind of be the cherry on top, I'll probably take it. But let's see how we react. I got a feeling we're going to come up for this high right here at 26,102. So we don't need to enter prematurely necessarily just yet. Okay, we might have a little S&T right here. ES has taken out its 10:45 a.m. high. NQ is not. So that's actually more interesting. Honestly, we could have a short here with a tight invalidation. We will see. Part of me does want to try this because of that bearish S&T. All right, let's do this. Let's start. Let's get in on 3 micros. So I'd even consider getting in. Oh, wait, damn it. I just took that on a single account. I hate when I do that, man. Luckily, I got out break even. I do that from time to time. I didn't have my copy trader on, and we missed our entry. Let's see if we can get it in here. All right, we'll see if we can get a quick little fill. We probably will, most likely. Now, I think we can go higher too first, but I'm going to be in tight here, and maybe I could add in above if it looks good to add in. So we'll see. I am in short. And just based off the 15-minute, can I capture, I don't know, 25, 30 points? Maybe, yeah, 30 points would be a good TP. So 48, 49. We'll see. And we will, we're going to leave the stop because I might even add in if it looks good. So we'll have a soft stop around here, around like 150s for pure invalidation. So we'll see. We'll give it some room. We're below midnight, below the previous day's POC. This is really my line in the sand, okay? This 15-minute inversion. If we just rip above, you know, I'll eat a quick loss. It's fine. It's just tough where we are in the middle of the range because, like, I see relative equal highs up here. I see relative equal lows down here. If we want to just rip back up for the day, it's possible. But let's see. I'm going to give it a little bit of room. Only in 3 micros to start. So really small. If you remember on Friday's stream with Hunter, I took a short similar to this, and it was looking terrible for the first, like, 20 minutes, right? It just was going straight into drawdown. But we just gave it the room it needs. And then we ended up catching, like, really, in hindsight, once you zoom out, we caught a really good price. So let's just give it some room here. Okay. I do think we might want to come up for this high, but I'm trying to play off that little 1-minute bearish SMT. I know that it could fail quickly, but at least it's a quick invalidation of that SMT. So we'll give it some room. Dude, you called that short and it flew down once it kicked into gear. Yeah, on Friday. Yeah, that was a solid trade. Really good trade. Mike is short from 167 first body close inside previous day's value area, targeting the value area low. Okay, nice. The thing is, the thing I don't like about this trade, and I might actually cut it, is that we are bouncing from the value area low right now. We've already engaged the value area low. You know, we're bouncing from it like really nicely. So we'll see. We'll see. This point of control is going to be like really interesting to me. If we just like really break with aggressive buying above it, I'm going to cut the trade. So we just engaged the point of control. I got a feeling we might rip higher. So let's see. Let's see. I want to see a good rejection in this overall zone. If I don't get it, we cut the trade. And I can still add into this if it starts to look right. So let's give it a few minutes here. ES looking pretty strong. One thing I'm a little worried about, ES has this 15-minute gap up here. Honestly, I think we might be coming for this 15-minute gap. Yeah, guys, I might cut this one early. I'm going to try and see how this 5-minute candle prints. Let's wait for candle closure. Mike, we might use different volume profiles. Like our settings might be a little different. I use the session volume profile. I mark everything off the 30-minute time frame, and I use ETH. So I incorporate the electronic trading hours with my profiles. Some people prefer to only look at the regular trading hours, so maybe there's a difference there. Yeah, my previous day's value area low on NQ is 26,017. Here, I'll double check that though. Let me double check that. Also, I'm on the micros, so there could be a slight difference in the micros versus the minis. That could be a factor too. Yeah, my value area low, I got it correct for my system. It's coming in around 26,017. Okay, so guys, we got a decent rejection once we engaged that point of control. So maybe this trade ends up looking good. Right, we kind of swept out this high. No 5-minute candle closure above here in this overall zone. So can we get one more leg down, right? That's all I'm looking for. This might still work. But let's see. Let's give it the room it needs, right? Coming back towards my entry a little bit. Okay. See if we can get some follow through here. Okay, yeah, Mike, you use the RTH. Yeah, so there's no right or wrong either, right? It just depends on what you find valid. I like to use the ETH. I just think I really like the accuracy of the levels when I incorporate all of the volume. But I know a lot of people just use RTH. It's just a preference thing, right? All right, so this is coming back into profit, guys. We'll see. Like, again, low-hanging fruit. I would just like to see it take out like 53s. As ES. ES does not look nearly as good as NQ here. I like this structure on NQ a lot better, but ES might pull it up. Let's see, though. My value area high I have coming in at 26,212 on the NQ. 26,212, and then here's the point of control of the previous day. 26,106. So really, again, this is my line in the sand, right? That point of control. If we break back above the point of control, I could flip my bias back to longs and still find longs today, most likely. But as of right now, this is going to be my bias indicator. You know, we were above the previous day's point of control. We had a strong move below, breaking it. So this is, you know, when we simplify, a simple break and retest, and I'm looking for one more leg down. See if we can hit this. Okay, looking better, guys. Looking better. Yeah, Mike, so you have 181, value area high, POC 96. So, I mean, also, we're not talking about huge differences here either, right? So we generally have the same levels, give or take a few points. It's not too far off from each other. All right, I mean, listen, that 5-minute is holding. Nice close. We could not close above it. So for now, I'm staying in this trade, right? No reason to get out of it here. Now I'm just watching how the candles print. This 15-minute would look really good for one more leg down if this area holds. No fair value gap created on this 15-minute. The 5-minute did, though. So this is one of the knocks against my idea, right? When we are looking for a pullback with trend, we ideally don't want to see the market create fair value gaps in the opposite direction. So on the 5-minute, we did create a fair value gap right here. We have a 5-minute fair value gap that we really want to see the market rip through. Can this hold the support to bring us higher? Still, it can. It can. But this is the counter trend for the current day fair value gap. So, you know, nothing's ever perfect. This is still my line in the sand right up here. Just want to see us take out 53. Yeah, ES, though, really wants to keep going higher. Like, ES looks a lot stronger on this 1-minute and 5-minute. So that's another knock here. Like ES really wants to go higher, it looks like, and we're trying to see which index is going to pull us. Is NQ going to pull ES lower with our trade, or is ES going to pull us up and trade into this 15-minute gap? It still remains to be seen. Now, just like we had this 5-minute candle, and I said, I just don't want to see it close above. Well, I bet bulls are thinking the exact same thing here. The bulls are saying, I just don't want to see a 5-minute candle close below the midpoint of this gap. So we're both kind of ping-ponging between each other. Either direction can be right so far. I want to see that 5-minute candle closure. I want to see us expand lower. But this remains my line in the sand, okay? This overall zone. So let's just be patient. I'll have to give your way a shot and compare. Yeah, try both, man. Try both, because I tried both and I just found I like the using ETH. For me, I've found a little bit more accuracy in my levels. But again, I know a ton of people that use RTH and, you know, they clean up. So it really depends on you, but I always say try both for sure. So what is it? It's 11 a.m. Yeah, we're just giving this the room it needs, guys. We're chilling. Okay, can we get this expansion? 3 minutes left on this candle. This is going to be an important one for me. Slow consolidation. This is what's great about trading the open, right? When you're at the open, often you can catch 25 points real quick. Once it's like 11 a.m., 25 points can be a bit more of a process to capture. And we're looking for about 30 here. But yeah, I mean, this is really my problem zone right here, this 5-minute gap. That's the problem zone. From the 15-minute, there's no displacement to the upside yet. We have displacement to the downside. So from a 15-minute perspective, we look okay. We just got to get through this 5-minute. If we invert this 5-minute gap, I think we could go for a new low a day and maybe even take out this low, 968. But that's, you know, just level to level we got to play. If we get back above the POC in this inversion, maybe we go back up to a new high. Still, either side is reasonable from here. I want to check the initial balance too. I think we might still be inside. Yeah, so we had a slight break of the initial balance, which actually helps our case. There is data that roughly like 68, 70% of the time, once we break one side of the initial balance, we are much less likely to make a new high a day. In the case if we broke the low, which we technically have broke the initial balance low, we are much less likely to come up and break the initial balance high. So I think Matt Mickey brought this up. I think we have a similar outlook. Like the high a day is most likely set in just based off data. Doesn't mean it can't happen, but from a data perspective, market making a new high a day is less likely, much less likely than it making a new low a day. So we're still on the right side of the trade, I believe. And we're just watching it. Like Austin said, sometimes you take a stop loss. Doesn't mean it was a bad trade, man. Yeah, I don't hate this trade still. It's just slow. Just put this hard stop in. So this is a hard stop. It doesn't mean I'll let it go all the way up here, guys. But really what it does is it just keeps my stops keeps my stop safe from being wicked out early because I really want to pay attention to this overall zone. So I just don't want to see a 5-minute candle closure back above like 115. All right. As long as we stay there, I would like to stay in this trade. But so I need to give it that room just so I don't get wicked out. But I may, like, if we got that 5-minute candle closure above, I would potentially mark it out of this trade for a small loss. But let's see. Yeah, ES really wants to pull higher. This is one of the problems with this trade. ES is noticeably stronger than the NQ, which on one hand is good that we're short NQ and not ES. This is why I talk about gauging relative strength between two indexes, right? Like if you want to be short, you want to be short NQ. And if you're long biased, you'll have a better time trying to long ES at the moment. Yeah, these 5-minute candles, though, man, not giving us much information. Not giving us much information at all. We're riding midnight. Anything relevant about that? Somewhat, Wendy. So, yeah, good question, actually. As you guys know, we often trade the midnight retracement, which Austin and Matt Mickey also trade this. They call it the midnight snap, market snapping back to midnight. This is, I don't have hard data on this, but just from reading price and watching candles print over and over again, what I have seen is that once we do retrace to that midnight open, and in this case where we got below it, it will often act as a resistance level now if the market is going to continue bearish. So it could still be a gauge for bias. So that's the thing. We have midnight, we have previous day's point of control, we have this 15-minute inversion. This is an overall zone that I want to see holds if the market's going to go a little lower. So yeah, midnight is relevant still, but not as relevant as when I'm trying to trade towards it most of the time. Yeah, this 5-minute is gross. ES looks like it wants to take a new high. We're really consolidating, guys, forming a wedge here. This looks gross. Can't get scared out yet, guys. No reason to get scared out of the trade yet. Man, the market was moving so clean though, and finally when we take a trade, it's doing this, but it's just the way it goes. I don't hate this trade yet at all. We got 2 minutes left on this 5-minute candle. This is really the key, this closure. Negative risk reward isn't working for me, then you shouldn't trade it, man. I mean, you also got to give things time, you know. The thing is, if you do want to trade with a negative R, right? If you're focused on that, and similar to what Austin and Matt Mickey said, they almost don't even pay attention to R. It's just about probabilities. But here we go. Let's see if we can get this push. Just need a little bit of an expansion, guys. Come on. We need to get that expansion. See, paying attention to those 5-minute candles, guys. No closure above. It all depends. But I do say for people that are going to go with just in general a lower R multiple system and try to rely on having a higher win rate, to do that, you do need to have a working strategy. Like a lot of people think, oh, if I go to trading negative R, I'm going to automatically have a high win rate. Not necessarily. You got to have a good way of reading price action. If you don't have a good way to read price action, it's not going to work. You're still going to take losses all the time because you're not reading price well. So, take it with a grain of salt, negative R. It doesn't automatically mean you're going to have a high win rate. You need to read price action well too. Man, this market is slow. See, we were really expecting that expansion there, and we still haven't gotten it. Pretty gross, man. ES wants to take this high. ES, I think, is going to take these highs, guys. Now, what does that mean for our trade or my trade? Maybe we put in an SMT there if we take that high, if NQ stays bearish. NQ really wants to, I think, make one more leg down, but ES is pulling it up. So it's a battle right now between who's going to win. Another 5-minute candle closure that I can't do with much information. Not a lot of information here for me, right? So just keep it as it is. Insert a stop loss. I have a stop loss, guys. Okay, let's see if we can get this expansion this time. Like, Jesus. You know what we're doing? We're just building up liquidity on both sides of this range. Let's see if we can get this expansion. Come on. 15-minute telling us, not telling me that it's overly bullish. I can say that much. 5-minute, there's just nothing. We are really just forming like a tight wedge, guys. This is a tight wedge. As soon as I'm out of this trade, I'll run another giveaway for y'all too. So let's hope it's a winner, because I'll be in a better mood. What do you guys think? Yeah, Josh, Barcode City for sure. Chop City. It's going to sell. Okay, here we go. Can we just get this expansion? Can you just, come on. Come on, bring it home. Bring it home, NQ. Come on. Don't do it again to us. Okay, come on. Come on. 2.5 minutes on this candle. I really would like to see this hit TP on this 5-minute candle. Do something. We winning this, Zach. Benjamin believes in me. Let's go. Oh my God, man. What a gross trade. What a gross range we're in. What is this, dude? Jesus. What is this, guys? This is bad. This is like bad. ES, I'm telling you guys, ES really wants to take this high. Like, it wants it so bad. My goodness. This is bad, guys. This is slow, dude. Do I have green eyes? I don't know. I think I do. Yeah, I have like green, or I definitely have light eyes. Oh my God. I might want, just going to leave it as it is. Part of me wants to cut it because it's just like not fun to be in this. Let's just give this 5-minute candle. As long as we don't break above the point of control with a strong 5-minute candle, I'll stay in the trade. It's about all I can do here. This is just so bad. The thing is, it's like, if we get back above the POC, are we going to fade that statistic that we do not make a new high day after we broke the IB low? Do we really want to fade that, and try to go long? I don't think so. Also, this is just a weird spot for the market to like make another new high, in my opinion. I think we have to go a little bit lower to gather up the liquidity. I could be wrong, though. I could be wrong. Yeah, this is so bad, though, guys. It's like really gross price action. All right. ES is definitely, did it take that high yet? Oh, my God. I almost want ES to take this high. Because then I could build some, like maybe we could frame out that there's some type of bearish SMT. And we know ES is going to take this high now. Like it's going to happen. So really our last defense is this overall zone and then ES taking this high and putting in a bearish SMT. That could bring us down. If not, it's going to be a stop out. So let's see. Bruh, what is this? Great Trade says we got room for downside delivery. I agree with you. That's why I like the shorts right now. Still favoring shorts. Shivam is long from the bottom shooting star. Red candle of 3 minutes. Okay. All right. Okay. Coming back again, guys. Coming back towards the entry. Can we get follow through? ES made equal highs right here. It's not really the best thing, but let's see. This is bad, dude. Straight up barcode. What risk to reward ratio is it? We just had a whole chat on the stream about how risk to reward ratio means nothing. I trade 1-to-1s, Sammy. Sometimes even negative. It all depends. This might be the fake out. This is just, there's really, guys, we just got to focus on our invalidation zone. That's all we can do here. Other than that, everything else in here is noise. So we just got to chill. Josh has got it. The risk to reward is make money. Facts. Yeah, guys, I'm gonna need to pop another Zin early. I'm just getting really bored. Can we talk about your new course? Yeah, we can talk about it real quick, Wendy. I have a course on ASFX TV, full-blown course. There's like 23 chapters, all about ICT and volume profile. Don't want to talk about it too much on the PFM TV stream, but you guys just find me on X. You could go check out my links. It's there. It came out today, which I'm super excited about. I did spend a lot of months working on that thing. A lot. Also, my YouTube channel, I have a ton of free content, totally free, that you guys can check out. In the description of this video is my YouTube channel. Time is the only limit to shorts. Yeah. This is just, it's just bad, dude. Did ES take that high yet? We know it's going to take the high, so just do it already. And then give us some more information. Bavay, do not spam about giveaways, or I will not do a giveaway. No spamming giveaways. I am going to run one. I'm going to run one soon. Risk sinking. You dwelt on it, man. You mean like risk sinking? Like, will I do that if I take a loss here? Yeah, I will. So I am gold. If I take a loss on this trade, instead of trying to take another trade on the same set of accounts, these are all my Tradeify accounts. Instead, I'm going to move over to a different set of accounts and I'll take a trade on my Apex account. So if I take a win on Apex, loss on Tradeify, my risk is now spread out instead of putting it all onto one set of accounts. I will risk sync. You are correct there. There are still chances it can go to my TP. Yeah, for sure. I mean, it's anyone's trade here. It's anyone's game. Again, this is my zone. This is my invalidation zone. I think it's a valid enough trade to take. I'm in on 3 micros, which I'm usually trading 5 on these accounts. So I'm also in a little bit tighter. It's all good. For a 25K account, which is better, scalping or holding? Trade with only 1 contract, aiming for around 1,500 profit per trade. If you have do you mean a $25,000 personal account? You don't mean a prop account, I'm guessing. For a $25,000 personal account, 1,500 profit per trade, even that's a little high. I would try to make like 200 to 500 per trade. On a prop account, dude, on a $25,000 prop account, you're getting like $1,000 of drawdown. So if you're trying to make $1,500 per trade, that's like insane. You can't, that's not going to work. On a 25K prop account, I think you need to trade you need to risk like $50 per trade. Yeah, totally don't agree with that. You should not be looking for 1,500 per trade on a 25K prop account. Great approach, Zach, copying that style. Yeah, for the risk sinking, yeah, that's a big part of my approach. And I think it's why I do well with prop firms. NQ, we got the hammer. I got mental hammers. I'm banging on it right now. Okay. Listen, I'm not going to get my hopes up again, right? Just let it be. Unless you want to go ham on them. Sure. Like you could, and there's nothing wrong with going ham on some prop accounts, but I would say it depends on where you're at. If you're somebody that already takes payouts consistently with props, and you are allocating your risk and you have a bunch of different accounts, sure, put a couple on the side to just like hit them heavy. That's fair. And also, it's not just about hit any particular accounts heavy. Like trade the right firm. So I would say if you're trading Top Step and you want to be aggressive on those, that makes sense because there's no consistency rule. I wouldn't be super aggressive on an instant funded account when you have a 20% consistency rule, right? Guys, if this trade hits TP, we'll run a giveaway. Oh, is it going to edge me? Is NQ going to edge me? It could. It totally could still, guys. I feel like this could edge me for sure. We got 30 minutes left on this hourly candle. Because here's the thing. We just swept out this swing low. So I really want to see expansion. I don't want to see it like sweep, like a liquidity sweep. Right? So I really want to see a closure. Or for it to just dip a little bit lower, because this could be a sweep and it just pulls back up and we're still in this range. That could happen. So let's be patient. Come on. Just a little more expansion. We got a minute left on this candle. If this 5-minute can't close below that wick and then we start pulling up, I may have to cut the trade because then it's like we could go higher. So let's hope that doesn't happen so I don't have to decide on that. Let's just hope it hits TP in the next minute and 40 seconds. Hey, there we go. Here we go, guys. Hold up. Thank you. W's in the chat. We're still calling them. Still calling wins. So Austin and Matt Mickey were both in a short at the open, called that win. And we just called another win. Let's go. All right. Knocking them away, guys. Base hits. Base hits add up. That's all you need. Stack those base hits. Don't go for home runs. Take high probability trades. Take low hanging fruit, right? My analysis is that we're going to make a new low. I want to see NQ make a new low a day. I don't need to hold for that. If I think NQ is going to go from wherever I entered which we entered around here, down to a new low a day. Well, I don't need to hold for a new low a day. Instead, I hold for here and I take the low hanging fruit. Now I don't care if I'm right or wrong on the overall analysis. It doesn't matter. I used a key level to kind of frame an idea around. I followed momentum. We're short biased for the current session. We're below the previous day's point of control. I outlined a key level for me, right? Which was previous day's point of control, also midnight, also this 15-minute inversion. We inverted this 15-minute bullish gap. I positioned myself around that area. I have a bias. I take the trade. I give my trade enough room, breathing room, so I don't cut it early just because it's going against me for a little bit, and I'm done. Cool. Now, do I need to take another trade today? Not really. I could, but if I do, I'm going to move over to Apex. Instead of continuing to trade my Tradeify accounts, I'll move over to Apex. Now, no matter what, I have a winning day locked in on one set of accounts. That's just how it goes. The wind's coming in. I do think we break the value area low. But let's watch out for this 5-minute gap, guys. So, like, if anyone is still looking for trades, this is really your short-term line in the sand. This 5-minute bullish gap is still holding up, right? So, I want to see an expansive candle below this gap. If we get that, I think we come for a previous day's low. Honestly, I think we could, or at least we come for like 967. Take out this wick right here. So that would be my next like level to level type idea. If we inverse this 5-minute gap, I think we look for this wick, 968. If we displace below that, previous day's low. Also on the inverse, if this 5-minute gap continues to hold as support, maybe we go higher. That could happen, and that's fine to me if that happens. I could care less now. Let it bleed. I hope it bleeds. I hope NQ bleeds, but it looks like we might have a bullish SMT here. Yeah, I think we might go higher, guys. At least short term, because NQ just took out this wick low, right? ES did not. ES is way more bullish than NQ, if you haven't noticed. So we have a bullish SMT right here. So maybe we go higher. I think ES really wants to come up and fill this 15-minute fair value gap. I think this is the draw on ES at the moment. So yeah, I would hold off on another short and just let price play out. You know, now imagine it goes all the way to my stop loss. Bro, if it does, that is why I love base hits. I could care less. I'm out. But all right, let's run a giveaway, chat, because I got 4 accounts to give away. So let's give away 2 more top 1 futures accounts. This is what you're going to do, okay? Hold up. Also, I want to remind everyone our Halloween spooky sale is done, but you could still get the best offers with Prop Firm Match, right? Also, how cool is this? Now, directly on the website, when you're checking out Prop Firm Match, if we're live, you can go ahead and click here and tap into the stream. I think that's a cool little addition to the website. But remember, guys, code match will always get you the best discount possible on all of your favorite Forex and futures prop firms. Some of my favorite deals right now is Top 1 Futures, 55% off. You can have a max allocation of 1.8 million. So pretty crazy, pretty insane. Another good one, obviously Apex. I'm trading with them currently. They're lower. Let me see. Apex, I think, is running 70% off at the moment. Yeah, right here. Apex, they are doing a 70% off deal with code match. You can have 6 million in funding with them. They're by far, they beat all other firms in terms of scalability, but they do have stricter rules. So you got to weigh those options on what makes sense to you. Tradeify is another favorite of mine, 30% off with code match. You could have 750K in max allocation. Yeah, just always you can get the best deals with code match. So let's do this, guys. Let's run one more giveaway, or 2 more. We'll give away 4 more accounts. We'll start with 2 top 1 futures. To enter the giveaway, type into the chat code match. Just to remind you, if you don't win the account, you can always just get the best discount. So type in code match in the chat, and I will be right back and we'll announce the winners. So be right back, guys, okay? All right. What's up, chat? We back. And ES pulling back. Honestly, maybe I think we still might be going lower. Maybe we'll take another trade. I don't know. We're kind of in a weird spot. I do think we go lower. Kind of NQ and ES are showing me they might be running out of steam here. But we already took our win, so we're chilling. Let's do this, guys. Hold on, let me get the music on. All right, guys, go ahead and put your entries in one more time. I just want to make sure I don't miss anyone. Type in code match to enter. Even if you've already entered once, go ahead and do it again. I'll give you guys 30 seconds. Get those entries in, 30 seconds. It's going to be a good week, guys. We're at the very start. So we got some good guests coming. I'm excited to have 4X Ike back on Wednesday. That's going to be good. If you notice, he's already been on once. We might start getting some regulars here. All right, I'll give you guys 10 more seconds. Get them entries in. 10 more seconds. Yes, broke above its previous day's POC. Looks like it's holding. 3, 2, 1. Okay, cool. Get these entries in. Just give me a sec while this list generates. Taking a little longer than usual, so just give it a second, guys. Here we go. Okay, cool. We got him. Hold up. All right, here we go, chat. Let's get these in. And let's run it. This is for top one futures. Garrow, there you go, bro. Garrow 2.0. Congrats, dude. Please, I know you're the winner. Let us know in the chat and give me your YouTube handle, please. Type in your YouTube handle so that we make sure we get the right person. YouTube handle. It's Garrow 2.0 is your handle as well? Okay, cool. Got you, bro. Yeah, KM, you keep saying that. Yeah, we know that TOF doesn't have, they have an activation fee. Yes. Blue Guardian does not have an activation fee for the challenges. Top One Futures does. It's just what it is. Tomorrow, when we start giving out Tradeify accounts, there's two types. We already went over this, but one plan does not have activation fees. One of them does. Yes, Cam, you got to pay the activation fee. Correct. If you pass. All right, let's run it. One more, guys. And then we'll do another giveaway in a sec. But okay, let's do this. Wonder Walks. Wonder Walks. There you go. You're the winner, bro. So please let us know you're here in the chat, and please give me your YouTube handle. So type your YouTube handle in the chat. Hell Saint, if you're not in, it means you missed it when you didn't type in time. You know, I can only copy and paste during a certain window. So everyone gets a chance. I let everyone know. If you kept typing after I already finished, it is what it is. But don't worry, man. I'm going to do one more giveaway. We'll run one more for 2 more accounts. So you have one more shot. Okay, it's Wonder Walks. Okay, cool. Thank you. All right, let's just run the other 2 right now. We might as well. And I'll give you guys, anyone that missed it, I'll give you one more chance, okay? So let's do this. If you missed your entry right now, you will not miss your entry. Type in Blue Guardian in the chat right now, and nobody will miss their entry. I'll give everybody 30 seconds. So go, type in Blue Guardian right now. Well, Hell Saints, you got a chance right now. Go ahead, put it in. Okay. No one's going to miss their chance. All right, get them entries in. I'll give you guys 15 more seconds. Ten more seconds. 5, 4, 3, 2, 1. Okay. That's it. All right, so let's see. Let's get this list. Also, guys, couple of disclaimers. Number 1, you can only win 1 account per week. So if you already won this week so far today, no reason to re-enter, okay? You can win 1 account per week. On top of that, always remember that if your country is restricted from trading with Blue Guardian, there's nothing we can do, okay? So I got everyone's names in there. I gave everyone ample time to get an entry in. So here we go. Let's run this one. Who's it going to be? All right, there you go. FX Golfer. Congrats, FX Golfer. So please type your YouTube handle in the chat for us, okay? We need to make sure you give us your exact YouTube handle. Otherwise, you know, people are trying to like game the system and get accounts when they don't deserve it. So, okay, there we go. It's FX Golfer. Cool. I got that. That was for Blue Guardian. And let's run one more. Same list. So everyone got a chance. Let's do it. Here we go. Okay, there you go. Bye, Luke. Bye, Luke. Congrats, brother. Do me a favor. Type your YouTube handle in the chat. In the chat, please. I see you in there. Just let us know your YouTube handle, bro. Yeah, Tradeify accounts tomorrow. So make sure to tap back in tomorrow. Bye, Luke. Let us know your YouTube handle in the chat, please. It might be by Luke. It might be the same as your name, but some people have different names than their YouTube handles. So we got to double check that. So please type your YouTube handle in the chat by Luke. Zach, are you in the Grand Cup? No, I didn't join the Tradeify Grand Cup. Maybe I will. I just feel like, guys, like I want to spend my time trading to make money. And like, I understand that you can win a big prize, but I feel like the odds that I'm going to be somebody that wins, like there's going to be so many people in there and so many people are going to full port their accounts. It's like, it might be a waste of my time. Jump in. It's all good fun. Maybe you're right. Yeah, I shouldn't be so serious about it. All right, maybe I'll join. I'll consider it. I'll let you guys know if I do it. But all right, guys, that's it for the giveaways. Garrow, you won a Top 1 Futures account, by the way. I saw you asked. Yeah, that's it for the giveaways, though. Again, tomorrow we'll be giving away the same amount plus Tradeify. Market's going lower. Honestly, I might get into another short soon. We have some bearish SMT at the highs. NQ still below its previous day's point of control. ES is above, though, so it's a bit conflicting, but I don't know. I think I still like the shorts, guys. Okay, thank you for that, Luke. I see you in there. Bye, Luke369. Thank you, bro. All right, guys. I think that's going to be it for the stream today. I think we had a solid stream. Oh, yeah, guys, I'm sorry. I'm so used to people knowing. To claim the giveaway, this is what you have to do. You have to go to Prop Firm Match Support on X, okay? I want you to DM them. I'm going to put the link here in the chat. Go ahead and DM Prop Firm Match Support on X. Their handle is PFM Support, at PFM Support, okay? Go ahead and DM them, send a timestamp and proof of your YouTube name, okay? Your YouTube name needs to match in order to win or in order to correctly claim your account. But that's all you got to do. I'll put it in the chat one more time. At PFM Support. But all right, guys, that's it for the stream today. Strong start to the week, I think. We took a win. We had Austin and Matt Mickey on. Just great day, great day. We'll call it, and I will be back tomorrow, same time as always, 8 a.m. John will be joining us, as always, on Tuesdays. And we have great guests all week lined up for you. So stay tuned, and we'll be back tomorrow. Peace and love, gang. Later.